Hello. Yes, good evening, friends. This is good evening, and this is your exam time also. So, the revision class has been planned in such a manner that I'm meeting you just to see what energy level that you are having, the timing of exam 2 to 5. வேணுமா? ஓகே, இல்லை இது வேண்டாங்க, இந்த பிரைட்னஸ் வேண்டாம், கண்ணு போகுது. ஓகே, இது போகிறோம். Good afternoon, Vanda. It's good evening. Hope you are prepared well. Hope the preparation timings went well. So, the next 4 days, Saturday, Sunday, Monday, Tuesday, Wednesday your exam, 4 days completely advanced accounting. Keep only one subject. Maybe for 2 days alone, 1 or 2 hours out of, suppose you are planning for 12 hours, you have to plan for 12 hours. 1 or 2 hours. So distraction you can use other subjects, not music or any other therapy and all. Other subjects is the distraction. So otherwise your preparation should be fully of advanced accounting. So if I prepare only advanced accounting, I will forget all other subjects. That is normal feel that every student get, every chartered accountancy student get. So thereby don't worry about that. But the next few days full of advanced accounting. It's all about the first paper, because every time the first paper performance is going to affect the other papers. If this is well, other is also well. If it is bad, then that is also going to affect, which normally shouldn't happen, but many times it happens like that. First examination is going to be advanced accounting. Next 3-4 days it has to be only advanced accounting. Maybe for Saturdays and Sundays 1 or 2 hours you can, as a distraction, use other subject, other theory subjects you can use, not again the problem based subjects and all. Like that you can plan. Anyway, so this revision class aim is not unlike, maybe many feeling is that sir is going to give important questions. Like that never happens. So first of all, in CA there is no important questions and all. So if somebody says it is important question, it is only a cheat code. So there is nothing like that actually, important questions abdinte. So but still, in spite of that, we used to tell like, these channel highly expected and all, because as a student I first prefer to go through the question paper and I would like to analyze, predict what is the more core areas expected. Adukapra every part is going to have relevance in the examination perspective, from the syllabus perspective. So first of all, you should know our syllabus. I'm just recalling from day 1 of our session. It is 8 different chapters. Our syllabus consists of 8 different chapters, 20 independent standard, history, geography of accounting standard. Another one was the framework. So from framework, I think I am expecting a 4-mark question this time. Framework lende I feel there might be a 4-mark question. Then 8 different chapters are amalgamation, reconstruction, financial statement of companies, cash flow, then you have investment accounts, then we have branch accounts, buyback, consolidated financial statements. 8 different chapters. Each of this chapter very much eligible for 14-mark question, but considering the past trend, we find most of the MCQ session at least 2-3 questions are coming from buyback. So if it is not coming in the MCQ session, then our 5-mark question is directly happening in the buyback. About such an important chapter is buyback of securities. You would have learned it with the 25 hours on all branch accounts for the last 7 attempts, 7 to 8 attempts I would say. Only it is coming for 5 marks. 5-mark or 6-mark question. The last question, the last segment, only 5-mark or 6-mark question. That is a simple presentation of one debtors method or simple accounting entries like that question. you would have been, if at all you have fear of like, sir, huge confusion in stock and maybe independent branches, and the some independent branch, one problem will always, because of the branch accounts difficult feeling you might be having. So please don't worry much about this, because considering the trend, same trend might be continue, but there is no need for hard and fast rule. Something happens opposite. So just analyzing what is the question paper type and all. Amalgamation question, definite. Amalgamation means what? It is either absorption question and all, and in highly possibility might be gifted people if there is a internal reconstruction problem, and most probably internal reconstruction problem coming for 14 marks, another absorption problem or amalgamation problem coming for 14 marks. So you could see a 28 mark question from this particular segment. Study model, it is two different chapter only. We only have taken that as single chapter. So cash flow, normally it could be a 5 mark question. In MCQs and all might be tested. Even though we solved heavy problems under, maximum 7 mark question, not beyond that we expect in cash flow statement. Regular question, investment account, this time also can be expected. Equity shares or debt securities question. So like that only we expect. Every time definitely you will be having a consolidated balance sheet. So very remotely tested area, consolidated SOPL. So mostly you will be having a consolidated balance sheet for 14 marks. From an accounting standard segment, 20. Above final summary is what now I expect internal reconstruction as well as an absorption problem this time. Buyback normally comes either in the MCQ session or definitely in the last part. Definitely it will come. So again, definitely means it's a mindset of a student. I am like a student. One among you, as if I'm writing exam, I was scanning through the question paper and I was just analyzing. So this particular question paper with the various attempts and all, Rama helped. So accordingly, and the prediction is what we do. So it is not like no scientific way and all. It is not a rule to be followed. Pattern, statistics we learn are the base panni or student I predicted. So if it is whatever I say, if it is not exactly coming, then you should not be cursing me and all. Just on your behalf or one among you, I tried. Similarly, accounting standard, when I analyzed, I find that assets based standard will have more relevance coming examination. AS2, 10, 12, 16, 26, all these asset based standard are having high relevance. And then what I understood is 4, 9, because last 2 times these 2 standards are not tested, AS4, AS9 and 17 segment reporting. When I say asset based standard, that includes even lease also. Then it could be a income tax based question and maybe a related party disclosure. So that is the other weightage. Whatever left, everything is the third weightage standard. So every standard has got chances to come and all. Examiner actually can test around 15 to 16 standards. So in that 3-4 standards will be clubbed through the chapters. Of at least 12 standards he will test. So I won't tell 3-4 standards will come and all. So through MCQs, through various parts of 4 mark questions, examiner can definitely test 12 to 13 standards so easily, my dear friends. But I somehow feel asset based standard might have lot of relevance coming examination. Okay, fine. This is just a study made considering the past examination question papers and what can be highly expected. So tier 1 expectation, tier 2 expectation, tier 3 expectation is what I believe all other standard. Going forward, my dear friends, today what are we going to plan? So we are going to solve similar like important topic. Is it important questions? No, definitely not. I would say the next few days your preparation should be from RTPs. Minimum 4 attempts, and then the suggested answers minimum 4. So when we say 4 attempts means maybe it can be taken as 5 also. 2025 beginning onwards you can start. So Jan and then you have May, September. Then 2026 you have Jan and May. About 5 year you can keep it. 5 RTPs and 5 suggested answers. Institute question papers, institute test papers, maybe last 2 examination. Institute or mock test papers, last 2 examination. Institute conduct mock test, and the test paper is also getting uploaded. So these should be your primary resources for your preparation. So if I go 5 attempts, so 5 attempts on a suggested answer, 5 attempts on RTP. By covering this, entire subject is covered. So thereby next 4 days is not for you to systematically plan each of the subject and all. So maybe you learn one topic. So what I am going to help you out with this is that today I am going to plan, say, amalgamation, reconstruction, and maybe we can discuss the buyback, cash flow statement, investment account. These 5 chapters order the basic understanding, basic concepts I will discuss. So what you will do, you will pick problems from RTPs from all these 5 chapters, problems from suggested answers from all these 5 chapters, and problems from mock test paper from all these 5 chapters, and you will be solving it in tomorrow's day, because tomorrow I don't have a session, and then we'll have a session again on Sunday. We'll take some other chapters and accounting standard which you will practice on Monday, and finally we'll be having a revision class on Tuesday also. But Tuesday we'll take the remaining small standards which you can revise on Tuesday. From Wednesday overall revision panni sammaya you can go for the examination. This is how we'll plan. So thereby it is not solving questions and all. Up a very difficult time here, listening only next 2 to 5 listening na, it's going to be very difficult, but you have to overcome that. So because the concentration during the 2 to 5, energy level between 2 to 5 is very, very important. Maybe last day we'll spend on to again same point and all. Once again I'm telling you, during these days, last 5-6 days na, have good sleep, 7 hours must sleep under the must. Don't stay after 11 o'clock and all. At night when you are staying awake, you are actually taking efforts only. So because the eye has got extra power usage, and all these things will have an impact during the 2 to 5 time. So thereby definitely, and then dark time, night time, the lights when it is on, unnecessarily don't spend time till 1 o'clock and all, 12 o'clock and all. Have a good sleep, 7 hours, 10:30 to 5:30 good sleep. Then maybe in between 10 to 10:30 or nap you take. Never take nap between 1 to 5 or 1 to 6. The body accustomed. By this time you should have done. If not done, at least during the 6 to 7 days. So it can still adjust. So do that. Take good diet, good food, no oily foods and all. Take good care, hot water. You should be knowing how to take good care of yourself. You're all so grown up and you're all matured enough and very, very smart people. But take good care about all these things. Don't get tempted. Screen time, avoid it. All these things, blah, 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 blah. Okay, so take good care, my dear friends. Students are friends now. Okay, so we would like to proceed further into the topics. So I just want to start with amalgamation chapter. Amalgamation. It is primarily titled as amalgamation. And we told you we are learning this topic. Along with this, we are learning accounting standard 14 also. Sorry. Then when we enter into the topic only, we understand the term amalgamation includes even absorption also. Later on, we have introduced, there is a concept of reconstruction. When we say reconstruction, we have 2 concepts called external reconstruction, internal reconstruction. For reconstruction means what, and I have explained and all. Basically, it is a loss-making company which had huge accumulated losses, want to eliminate those losses. And the elimination of losses, what they will do, they will reduce the equity share capital, they will reduce the debt, and they will eliminate this accumulated losses from the balance sheet. The core concept of reconstruction, which can be done in 2 ways, internal, external. Internal means simply making accounting entries for these intended reductions and eliminations. External, forming totally a new company and taking those assets at whatever value you wanted to reduce it, taking those liabilities, then fix the consideration without taking any reserves and surplus. Like that we will do externally, which means like a normal absorption by floating a new company we will do. But end result of making entries in the books of same company or new company formation and taking over, end result will be same, but process is completely different. But when you do for external reconstruction, it is accounting wise, it is the same as absorption. That is how the topic is finally coming to. The topic is finally coming to amalgamation. absorption and external reconstruction. Anyway, we have explained coffee, tea, example, etc. blah 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 things, and not time to discuss those things and all. So amalgamation, absorption, external reconstruction, conceptually, legally, technically different. Accounting purpose they are same. We are telling that there are two types of companies: selling company and purchasing company. Definitely in this arrangement of amalgamation, absorption, reconstruction, we understand there will be some companies liquidated, we call that as selling company. Some company continue, we call it as purchasing company. But primarily what are we going to do is accounting in the books of selling company, accounting in the books of purchasing company. This is what we are going to do. In the books of selling company, we understand actually there will be lot of ledger accounts, but question will give you a balance sheet of selling company. Definitely question will give you whether they are giving balance sheet of selling purchasing company or not. They will give you balance sheet of selling company. Upon the selling company order various assets, liabilities, owners fund will be there consisting of share capital and reserves and surplus. We have discussed a 5-step approach of closing the books of selling company. What are the 5-step approach? Step number 1, dismantling the balance sheet by preparing basic at least realization account and owners account called preference shareholders and equity shareholders. We may also prepare few other accounts for assets and liabilities that are not taken over, and we also prepare few other accounts like cash and bank, various forms of consideration, purchasing company and equity shares in purchasing company. This is the normal accounts that we will be preparing in the books of selling company. So various assets will be transferred to realization account, liabilities will be transferred to realization account, preference share capital to preference shareholders, equity share capital to equity shareholders, all the reserves and surplus to equity shareholders, and then we are dismantling the balance sheet like that. Thereafter, we make a computation called purchase consideration. Compute it. That amount we will make a simple entries, that is consideration due entry by purchasing company. Other will write to realization. Then this consideration will be received, cash form, equity shares in purchasing company we receive, but that account gets closed. Purchase consideration received na originally receivable, now received, that account gets closed. Received consideration will be taken to respective accounts. Received consideration into respective accounts in cash account, equity shares account. Then you distribute consideration firstly to preference shareholders. Whatever agreed amount, suppose here it is 10 lakhs, we agree to give only 9 lakhs na cash form or shares form, you agree to give 9 lakhs na, balance will go to realization account. If no amount is specified na, whatever they have contributed, that amount will be simply paid off. I am just explaining or recalling whatever sequence of steps we discussed. Logically, otherwise automatically will come simple 5 steps. Dismantle the balance sheet, purchase consideration due, purchase consideration received, purchase consideration distributed, transfer realization profit or loss. அப்படின்னு spell பண்ணி in your mind spell, in the exam spell பண்ணி you write it. Definitely you will be getting complete marks from this ledger accounts to close the books of selling company, provided you calculate the purchase consideration correctly. What are the special things you should remember, because it is very difficult to read theories. After today's class, you should be directly solving problem. So recall this provision, that's all. Okay. What are the various issues you should remember? Remember, it's very simple, my dear friends. So prepare ledger accounts to close the books of selling company. These are the accounts you should be preparing. If the question asks you specifically prepare realization account, equity shareholders account, only those two accounts. Any other accounts we will present only if there is need to compute anything as balancing figure. Otherwise, you can ignore those accounts. If a question asking you specific accounts, don't prepare all the accounts and all. Prepare only necessary accounts. Like that, we'll be preparing the necessary accounts. Okay, number 1. Number 2, what we told is that if any items of asset or liability not taken over, generally we will open separate account for such asset or liability not taken over. And that will be sold by us. We will realize it by cash. But if the book value 8 lakhs, we realize only 7 lakhs, asset lane we are getting loss set, then that should be transferred to realization account. Liability adhe madri will be opening separate account. We should pay the liability. Any difference, that will also be transferred to liability account. Here is the place I explained to you that it can be taken directly to realization account also. So, but if so many items are there na, better take it to realization account. But institute presentation I told you, if any 1 or 2 items of asset liability not taken over, open separate account, realize it, pay it, any differences, take it to realization account. This is the point we told. Similarly, cash and bank. If nothing is specified, cash and bank taken over or not taken over, it is taken over. But naturally, cash and bank also should go to realization account. We should not be simply abruptly open cash and bank account and all. So many times we may receive cash as consideration, thereby we are opening cash account. So you should not take cash and bank balance to the cash and bank account. It should be normally taken to realization account only. But when it says the cash and bank not taken over, only when the question specifically says that all assets taken except cash and bank, then cash and bank not taken over. Then some information I would like to recall certain problems where there were 2 liabilities, creditors and debenture. Our question says that A Limited will take over all asset and to take over debenture. Like that information given na, all assets taken, debenture taken, but creditors not taken, because out of 2 liability, when they say so and so liability taken na, it is implied that another liability is not taken. Otherwise simply they should not have told anything. Then I could assume all the liabilities taken. But out of 2 liability, when they say 1 liability taken na, other liabilities taken na, we should be considering is what we should take. Suppose all assets taken given, liabilities but nothing mentioned na, actually all liabilities also taken only. But when specific liability taken given na, other liability not taken, like that we should be taking. So these are the points, simple points we remember relating to closing the books of selling company. Similarly, suppose purchasing company pay cash to selling company for meeting expenses. Na, then what is the accounting entry we'll be making na? It is cash to maybe you can, in whichever form you do, no problem. Cash to realization, you can do realization to cash. Like that you can make the accounting entry. In the sense, you receive money and you spend money, or you can use the name of the other company also, no problem. But chumma it is conveyed purchasing company meeting liquidation expenses. It is not specifically given as paid to selling company, like that not given na, then normal for this no entry will be made in the books of selling company, only entry will be made in the books of purchasing company. Suppose simply given liquidation expenses given as 20,000 na, that is implied it is paid only by selling company, it is not paid by purchasing company. Simply given liquidation expense 20,000, that is implied it has to be paid only by the selling company, not paid by the purchasing company. In that case, there is only one entry to be made, realization to cash. When did I say cash to realization to cash? That's very simple. So for meeting liquidation expenses, purchasing company paid cash to selling company, like that conveyed na, then we can make this 2 entry. Literally I received, I spent, it doesn't affect any profit or loss, it doesn't affect any cash balance, it is automatically getting, I received cash and that is spent cash, like that it can be accounted. But like that romba clarity information not there na, then normally expense has to be paid only by selling company. These are the various things we discuss about. Once again 5 steps: dismantling the balance sheet, transfer all assets to realization debit, assets not taken over separate account, miscellaneous expenditure should be taken only to owner's account, equity shareholders account, all liabilities to realization account, preference share capital preference shareholders, equity share capital, and all the reserve surplus to equity shareholders including losses. Like that we discussed about dismantling balance sheet, PC calculated, due receive, distribute. Distribution firstly to preference shareholders. Preference shareholders agreed amount not given, then the contributed capital. Any balance in preference shareholders account will be transferred to realization account, and finally whatever left in the business may be received from them, or maybe already we have some balance, everything goes to equity shareholders, and finally whatever balance in the realization account transferred to equity shareholders. Equity shareholders will tally, smile, like that we discuss accounting in the books of selling company. Okay, அதுக்கு சான்ஸ் ஒரு 30% தான். 70% chance in the books of purchasing company தான். Most of the times question is asking entries in the books of purchasing company, because selling company books is not based on any accounting standard. Selling company's books is accounting is based on general accounting rules only, GAAP only. But purchasing company books accounting is based on accounting standard 14. Purchasing company's books is based on accounting standard 14. So here, for making accounting in the books of purchasing company, AS 14 will be attracted. Though basically we have 3 primary entry, 3 secondary entries and all, before that let us discuss this. AS 14 classify amalgamation in the nature of purchase, amalgamation in the nature of merger. AS 14, because AS 14 and MCQs coming. Apart from these two 14 mark question, MCQs coming. But we are having amalgamation in the nature of purchase, amalgamation in the nature of merger. Okay. Now, what is this difference? Very simple, my dear friends. So, merger na some 5 conditions to be satisfied. So, you should be learning those conditions and all. We have taught, we have spent lot of time and all. Maybe one time I can quickly tell in 30 seconds time. Shareholders holding. You should not start with 90% of shareholders. I told you that. Shareholders holding not less than 90% of face value of equity share capital of transferor company shall become shareholders in the transferee company by virtue of amalgamation, except the shares already held by the selling company or by its nominees, etc. I mean, not purchasing company, not selling company, purchasing company. So don't worry. So purchasing company, selling company. Selling company books 1 lakh is the share capital na. Adala shareholders holding at least 90% amount should become shareholders of the purchasing company. For this purpose, if purchasing company is already having some shares, those shares should be excluded. Remaining you should apply that 90%. Then consideration should be given only in the form of equity shares. Then all assets and liabilities should be taken. We should not make any adjustment to the book values. Business shall be continued. So if these 5 conditions are satisfied, it is amalgamation in the nature of merger. What is the advantage? Normally, amalgamation we are allowed to take only selling companies assets and liabilities. But if it is merger, we can take assets, we can take liability, we can also take reserves and surplus. Which means literally we are taking entire balance sheet except share capital. Both equity share capital, preference. These are the only 2 amounts not taken. அதுக்கு பதிலா we are giving consideration. அப்போ if our consideration matches with this share capital amount then there won't be any further balancing figure. We have assets, we have liability, we have reserve surplus. We give consideration equal to this amount then same balance sheet comes as it is. But if we give consideration more than share capital or less than share capital, then some difference will come, which will be normally called as gain or loss. If we pay less consideration, so the consideration is less than the total amount of share capital, it is going to be gain for us. It is going to be gain for us. So that gain will be simply credited to capital reserve in addition to all the reserves and surplus as it is. General reserve, P&L account, revaluations, everything should come as it is. In addition to that, we will recognize capital reserve. But if we pay more consideration, that is a loss. That loss will be adjusted against reserves given. But we told some order. What is that? General reserve of not only selling company, general reserve of combined entity, both selling companies and purchasing company. Thereafter, it is only P&L. But even before adjusting general reserve, you can also adjust against even capital reserve. Our capital reserve of combined entity, adhikaparam general reserve of combined entity, then only against P&L of combined entity. Idhukku mele some more loss may not come, still comes then naturally that has to be shown as a P&L debit balance only. So basic in case of merger what I should do sir? ரொம்ப simple. Definitely they will give selling company's balance sheet at least. Some problem purchasing company and selling company balance sheet will be given. First calculate again purchase consideration. Compare it with the face value of share capital of selling company. See any gain or loss. Gain na no problem, it is fully capitalism. Loss na check where it is getting adjusted, because mostly they may not ask you entries, also they may ask you balance sheet. About if it is loss means what do you mean by loss? Consideration amount more than the share capital amount. And the loss you should check where it is getting adjusted. Check with the combined capital reserve of both the entities. If that is not available, combine general reserve, and finally combine P&L. After adjustment, whatever reserves and surplus left, others should be brought into the books of the purchasing company, and you can easily prepare a balance sheet. Our balance sheet will be existing assets plus taken over assets, everything at book value only. Existing liability, taken over liability, existing reserves and taken over reserves after the adjustment of this particular loss alone. Then share capital as it is plus a newly issued consideration. That is how you prepare a very simple balance sheet. Amalgamation, the nature of merger, so confusion no la easiest problem area. You feel some chances are there for merger. They may ask you pooling of interest method, either in 2 marks MCQ type or in this form of 14 mark question it can come. So easily you can manage with this pooling of interest method. Next what we discuss adala or important point. Okay, we will discuss amalgamation in the nature of purchase. அதுக்கு தான் we discussed 3 primary entries, 3 secondary entries. Basically what அப்படின்னா business purchase to liquidator, we will say consideration due. Actually it is assets to liabilities to various forms of consideration. The single entry we are breaking into 3 forms: business purchase to liquidator, then incorporation of net asset, assets to liabilities to business purchase. Here only we find the net asset getting compared with the purchase consideration. The difference is recognized as goodwill or capital reserve. So if you get balancing figure in the debit, that is goodwill. If you get balancing for the credit, that is capital reserve. But basic concept what? Consideration paid more than the net asset acquired is called goodwill. Consideration paid less than the net asset is called capital reserve. I just want to draw your attention to few points what we discussed. What sir you discussed? Purchasing company making entry. Our selling company books already you have goodwill in the balance sheet. Already we have goodwill in the balance sheet. Should that goodwill be considered for the incorporation? Should that goodwill be considered for incorporation? For that we told, my dear friends, first of all adjustment separate value has been goodwill given. Separate value goodwill separated given then whether it is net asset method or whether it is net payments method, that separate value has to be considered. Separate value given separate value has to be considered. But goodwill pati nothing is mentioned in the adjustment, only consideration information given then if it is net payments method, we will not take that goodwill. If it is net payments method, we will not take the goodwill. But if it is net asset method, we will take the value of goodwill. So that you should be understanding. In one of the problem we solved it. Suppose selling company books goodwill is there, it will be taken in our books provided it is net asset method. But net asset method separate goodwill given sir, upper balance sheet goodwill should be taken separate goodwill given whether net asset or net payment, so balance sheet will be ignored. I will take only the separate values. But separate value not given net payments method I will not take balance sheet goodwill, we will arrive only goodwill as balancing figure. But net asset method we will take the goodwill. So many things start. So I felt revision not solving one question 30-40 minutes chapter over abdi illa. These many special points if I recall, you remember it, that will be the best thing to do in a revision, so that immediate today, tomorrow morning onward, you start solving 4 or 5 amalgamation problem more than sufficient. You need not solve 20-30 questions etc. This is the basic objective behind this revision class, my dear friends. Okay, so again, so business purchase to liquidator, assets to liabilities to business purchase. Next is settlement of consideration, liquidate or debit, credit whatever you pay. This is the entry in which you split the issue value into the face value and securities premium. Face value and securities premium. So these are the things, because so many months before taught, you would have revised well and good. Otherwise, I thought of recalling all the provision for you for the last 3-4 days of revision of advanced accounting. Okay. Next, few other entries will come. Expense of selling company paid by purchasing company. We told you entry will be goodwill or capital reserve to cash or bank. Liquidation expense of selling company paid by purchasing company. Entry will be goodwill or capital reserve to cash or bank. What do you mean by goodwill or capital reserve, sir? It depends upon, in the second entry you had goodwill, this entry also goodwill. If the second entry has capital reserve, this entry also capital reserve. Like that we discussed. Next we have elimination of mutual owings between this purchasing company and selling company. If you had debtors, creditors, bills receivable, bills payable and all, you should not do anything before this entry, which means when you take over, you should bring it in the books. After they become one and the same, eliminate asset, eliminate liability. Accounting entry will be liability to asset, creditors to debtors, bills payable to bills receivable. Like that you make the entry. Then finally you have unrealized profit, or which is also called a stock reserve. So upstream downstream, don't get confusion like consolidation and all. Chumma make the entry as goodwill or capital reserve to stock. Like that you can easily make out the accounting entry, goodwill or capital reserve to stock. So compute unrealized profit properly. It is for the goods already transferred, still lying unsold. You will calculate this unrealized profit. You will make the accounting entry goodwill or capital reserve to stock. This is what we discussed for amalgamation nature of purchase. Appo purchase kum merger kum difference romba simple. So then we will be recording assets, liabilities and reserves and surplus after adjustment of difference between consideration and face value of share capital. Here we'll take only asset, we'll take only liability. Consideration what we pay will be compared with net asset, differences goodwill or capital reserve. This is how we'll be having amalgamation the nature of purchase, amalgamation the nature of merger. And we have learned accounting the books of selling company, accounting in the books of purchasing company. Then we also understood about purchase consideration. This is very important. Net asset method, net payments method, lump sum method not there. So but net asset or improvised method, we call it as intrinsic value absorption. Intrinsic value absorption, 30-36 hours or a content. So by reading a problem, if you find defined quantified payments, when we say defined means what form, and quantified payments how much, so how many shares you issue, what price you issue, if that is given, then definitely we can understand that as net payments method. And also cash amount, if any cash amount should be quantified, every amount, not one part quantified, remaining balance in cash, like that word, naturally it can't be net payments. Net payments, every amount what you want to pay, it should be defined, quantified. Mode, number, price, everything should be pakka quantifiable. Simply add the amount. That is what purchase consideration. Romba simple. But if the amount is not defined and quantified, then obviously net asset method. So then you should take assets taken over agreed value, liabilities taken over agreed value. That difference we are understanding as purchase consideration. Agreed value given, take agreed value. Agreed value not given, don't take 0. Agreed value not given, you should take the book value. Like that we should be calculating pakka purchase consideration. This is the key part. Take your time, maybe 2 minutes, read again, capture the facts, and then calculate purchase consideration. Remaining on all mechanical jobs in amalgamation chapter. So don't think amalgamation is such a big chapter and all. So though we discuss this step by step manner, so many issues, but it is going to be very, very simple only. Like that we discussed. Next, intrinsic value absorption, which is only an extension of net asset method, what I told. The moment they say A limited absorb B limited on the basis of intrinsic value, it means net asset consideration, net asset of selling company is what I want to pay you, but that will be paid by issuing my shares, and which will be valued based on net asset of my company. So this is the concept. Net asset amount of selling company will be discharged by the equity shares of purchasing company, which is issued based on the net asset of purchasing company. Sorry sir, takkan you are telling, flow fast I am not understanding. Basic of what we told, I will explain you. Compute net asset of both the companies. So we'll take assets minus liabilities of both the companies. Next, take number of equity shares. What we require is only of purchasing company, so that we will get net asset value per equity share of purchasing company. So which is net asset divided by number of shares, we will get net asset value per equity share of purchasing company. This alone sufficient. Then amount payable is equal to net asset of selling company da. But that will be paid by using my share, which is having this much value. Say this is K abdina, then this is ABC na. ABC divided by K da number of shares to be issued. ABC divided by K da number of, what is ABC? Net asset of selling company. What is K? Net asset value per share of purchasing company. Upon number of shares to be issued should be computed. After finding number of shares to be computed, again that will be multiplied by K to arrive at the ABC da. ABC da consideration. But sometime question might give you this 3-4 words. So many times repeated thing. However, entries will be made at par value. Like that given na, then after finding out number of shares to be issued, which is ABC by K is the number of shares to be issued, will be multiplied only with par value, face value. That alone will be recording as purchase consideration. Never get confusion. What we record as consideration, they also should record as consideration. So in effect, I might be giving 10 lakhs rupees 20 is my value na, it is 50,000 shares is what I am giving. And when I multiply with the face value of 10 rupees na, it comes to only 5 lakhs. About 10 lakhs promise, you are giving only 5 lakhs. No. I committed 50,000 share. I am giving 50,000 share. They will definitely get worth of 10 lakhs. I am also actually giving worth of 10 lakhs. But in my books, when I say recorded at 5 lakhs, you should also record only purchase consideration as 5 lakhs and not as 10 lakhs. So these are the various other concepts that we discussed there. That includes intrinsic value absorption. Then if you have debenture settlement, so many debenture issues given and all, romba simple. Debenture settled in cash and all, no problem. Debenture but settled in debenture na, there will be two parts called redemption part and issue part. Redemption part, issue part. What is that, sir? So selling company or debenture 12 lakhs. Above we might tell that, so purchasing company will redeem the debentures of selling company at 10% premium by issue of debentures at a 12% discount. Like that given 10, so 12 lakhs debenture is selling company books. We will redeem at 10% premium by issue of debenture at 12% discount. Appo this is the redemption part, this is the issue part. Like the two parts is there. Seri. Appo what we told na, we have purchase consideration, selling company's books accounting, purchasing company books accounting. Adala, when we say purchase consideration, we should know whether it is net asset or net payments. If it is net payments, debenture settlement will not have any effect. So remember all these things. But if it is net asset method, we will take assets minus liabilities. Upon you should be taking redemption value here. What is the redemption value? 12 lakhs. 10% premium it is just 13 lakh 20,000. So that alone will be taking as part of purchase consideration calculation. Net payments you won't take. Selling company books the adjustment will not have any relevance. Selling company books debenture taken over, simply transfer to realization account. So they will not receive debenture, give debenture, etc. For them it is taken over. That's all. Purchasing company books when they make the incorporation entry, assets taken over, agreed value, liabilities taken over, agreed value, we should credit face value of debentures issued, face value of debenture issued, which is computed as, remember, redemption value divided by 100 plus premium on issue or 100 minus discount on issue. அப்போ இந்த எக்ஸாம்பிளில் when I say 12% discount na, it is 13,20,000 divided by 88 percentage, which gives me 15 lakhs. Not only that, this entry should also reflect a premium or discount on issue. In the given case, it is discount. About debit side, debenture discount 12%, which is 1,80,000. Net effect 13,20,000 da, but accounting entry debenture should be credited with face value of debenture issued. Face value of debenture issued is equal to redemption value divided by 100 plus premium or 100 minus discount. Like that we discussed about the debenture settlement. So these are the various things that we learned for amalgamation and absorption, including intrinsic value absorption and all. So 2-3 question, 3-4 question, take solve problems, that is closing the books of selling company, entries you make, balance sheet you prepare, balance sheet of the purchasing company na, existing assets, taken over assets, 2-3 times practice is sufficient. Exam la don't expect like no accurate answer, okay, adu dream பண்ணுங்க, but every question from the beginning till end you should be in a position to complete it. If it is completed na, then examiner thought process will be 14 marks la, how many marks can be reduced. So in the mistake say to 5 marks reduce, we will give 9 marks. Iduve incomplete problem, so you have not gone to end of the solution, semi அப்படியே விட்டாங்கன்னா, then examiner mentality is how many marks to be given rather than how many marks to be reduced. We will think on how many marks that can be given. In the step ku 1.5, in the step ku 3, so totally 5 marks கொடுக்கலான்னு we will be giving. அதுவே full solution இருந்தா, full solution made, here and there mistakes is there, அப்ப அந்த mistakes க்கு how many can be reduced. அதுவே partial question, even though it deserves to have 10 marks, but they may not give 10 marks. Our mind not how many marks reduction, what is incomplete portion they will not check. இதில் which area marks can be given. அதனால I will tell you, ஒரு chapter படித்தா definitely I will attempt the question from the beginning till end. I will be completing balance sheet பக்காவா I will do. So I am not so rigid and egoistic to get the final answer. I will go to next question, because advanced accounting, I will tell you now itself it is going to be a lengthy paper, because that happens to be. So only when you write it throughout 3 hours, that paper is getting completed. Otherwise normal feedback is that 95% students, not like 1 or 2 students, will tell paper lengthy sir, paper lengthy. You know why lengthy? In between no konjam relaxation time not there, taka. So like in our class no, in between breaks we used to take class, that is not possible in examination. So fast you should write. Adanala the ego venda, complete it, go to next question. If you don't know, make some assumption, do the problem and go. Otherwise leave it, go to next problem, then come and complete the problem. So that is what required. So have the base of every chapter in the 4-5 question you study, rather than 60% thorough understanding of the syllabus. 100% average understanding is okay, because people will tell no, half knowledge is very dangerous and all. I would say ippatiki preparation, all concept I am revising, solve 4-5 question, go to the exam, solve the particular question, attempt it fully from the end, beginning to end you complete it. Definitely you will fetch marks, my dear friends, don't worry. In the time over the period, I don't know you are getting that or not, I am getting it for the last few days. Next day na, the examination, the fever and the examination or vibe irukke, adu vera level la irukum. I don't know if you are not getting it, at least when I am telling now you should be getting it. Exam Wednesday 2 to 5, oh my god. Okay, so going to the next part, which is reconstruction, particularly internal reconstruction. When it is internal reconstruction, basically it is going to be reduction in share capital, preference, debt, eliminating accumulated losses, but there will be some other asset also will be having increase as well as decrease and all. Appo internal reconstruction basically a problem where question will give you balance sheet of a particular company. Okay. They will give you balance sheet of a company. They will give various information. They will give you various adjustments, which is primarily increase or decrease the values of assets and liability. Appo asset increases. Entry is asset to capital reduction, because institute is using the word capital reduction. Unless question is asking you to use the word reconstruction, we will use the word capital reduction. Asset to capital reduction increase. Decrease na capital reduction to asset. Some liabilities there, creditors increase. It is capital reduction to creditors. You know, basic concept. Asset showing debit balance. Increase na asset is to be debited. Decrease means asset is to be credited. Liability normally show credit. Increase na liability is credited, decrease na liability is debited. So other part will be capital reduction. So thereby entries are asset to capital reduction to asset, or assets and liabilities. Simple increase or decrease. Then if it is equity share capital of rupees 10, 1 lakh share, 10 lakhs. Now this is going to be reduced to 6 lakhs. How it is going to be reduced to 6 lakhs? Actually there are two ways. We will bring surrender of shares concept later. So 1 lakh share of rupees 10 is now going to be 1 lakh shares of rupees 6. About 10 lakhs becoming 6 lakhs. But we don't make entry only for 4 lakhs. What we will do, old denomination will be cancel, record the new denomination, difference will be taken to capital reduction. Now we will write equity share capital of rupees 10. Entire 10 lakhs will cancel. Even though reduction is happening only for 4 lakhs, we will cancel entire 10 lakhs. We will record to equity share capital of rupees 6 lakhs. Then we will write to capital reduction 4 lakhs. Internal reconstruction, highly expected problem area for the coming exam, because it's like alternative. So last exam we had a SOPL and balance sheet. So SOPL balance sheet, there are konja remote chance kammi. But if it comes na, don't leave it and all. Format daba, schedule 3 format. Fill in the blanks. Trial balance will be given. Just put it into the blanks. So like that we are just making accounting entry for equity share capital, preference share capital, debentures. The same way you make the accounting entry. Cancellation of old denomination, recording the new denomination. Difference will be taken to capital reduction account. Like that we discuss. Next, various asset, various liability and all we told. Liability related clarifications were like this, my dear friends. Liability already recognized in balance sheet. Liability not recognized in balance sheet. Like the two situations possible. And other two situations. What? Waiver and payment. Same way, waived, paid. About already there is a liability in the balance sheet. It is getting paid now, then it is not capital reduction. Every adjustment need not involve capital reduction. About balance sheet you have a liability and already shown in balance sheet. It is getting paid now. It is entry is liability to cash or bank. Just a liability to cash or bank. 3-4 questions solved from internal reconstruction. If it is waived means they are telling creditors waived, creditors reduced their claims, then it is liability to capital reduction. If it is paid, liability to cash or bank. If it is waived, liability to capital reduction. Sorry. There can be many liabilities which are not there in the balance sheet. Other two situations, and the not recognized balance sheet is getting waived. Normally we could see only preference dividend, the arrears of preference dividend. Sometimes no, when I say it is not recognized in balance sheet, means people think only in the notes. Sometimes within the balance sheet it may be given preference share capital 5 lakhs. Besides the preference share, they would have told arrears preference dividend, but that is not in the amount column. But you should not think that it is a preference dividend which is recognized and all. Recognized means it should be shown in the amount column of the balance sheet. Appo the recognized. Tomorrow information within the balance sheet is not recognized. Appo arrears dividend, whether it's given in the notes or within the balance sheet as an information, or wherever it is information that is waived means no accounting entry will be made, no entry will be made. But If it is paid means entry will be to cash or bank, and it is a loss, so you will have capital reduction account. So sales tax liability, you remember? Similarly, contingent liability payment. It was originally contingent liability. Now it is getting paid na, then obviously capital reduction to cash or bank da. Similarly, cancellation of capital commitments. So it is not a liability shown within the balance sheet, but it is getting cancelled, for which you are making a penalty payment. So entry will be capital reduction to cash or bank. So like that, there are several payments that will happen, and which is not relating to a recognized liability na, capital reduction to cash. But if it is recognized liability na, liability to cash, like that and all, we learned simple things now. So hardly 7-8 adjustment or land and building or increase or decrease. Math assets poduva decrease, like that to entry. Or preference share capital, equity share capital or increase, decrease will happen. Then accumulated loss written off, goodwill written off, miscellaneous expenditure written off. 1 or 2 in between special items will come. So debentures were given an option to accept fully in cash, or 90% of cash in a, it is 90%, shares in a full amount, like the null would have been given. About debentures totally 10 lakhs, other they would have told half of debenture accepted cash, half of debenture accepted shares abdina. So shares ku 90% கொடுப்போம், I'm sorry, cash ku 90%, shares ku full amount. Appo we will say, oh, equity shares 5 lakhs, cash na 4.5 lakhs. So remaining 50,000 we are not paying. So thereby accounting entry will be that particular amount debited. 10 lakhs is debited, debentures debit, credit equity share capital 5 lakhs, credit cash 4.5, credit capital reduction to the extent of 50,000 or a special adjustment. Similarly, debenture holders took plant and machinery worth rupees this much, like that given na, book value is different, take over value different abdina, then you should know properly make the accounting entry, my dear friends. Debentures debit to the extent of take over value, that amount is getting reduced. Credit the plant and machinery only at the book value, and then we will be recognizing the capital reduction difference. That is how we should be understanding. Credit plant and machinery only at book value, but reducing debentures at the dash value, take over value. Then the difference is profit or loss. And we are understanding, my dear friends. So like that, one takeover or illa in the mari settlement or like that, 1 or 2 special transaction can come. That is a normal event. The English statement, if you read, entry will naturally will come. Basically, it involves increase or decrease in the values of asset liability. The differences naturally goes to capital reduction account. That is how we are understanding as internal reconstruction. No heaviness, பயங்கர easy problem. சரி, அப்புறம் untold story, goodwill, miscellaneous expenditure, accumulated losses, all these things, even though there is no direction for you to write off, but we should write off these things. All other assets and liabilities, reduction, increase should be given as adjustment, then only you will try. But goodwill is there in the balance sheet, now you should write off. Loss making company cannot have goodwill. Miscellaneous expenditure you should write off. Accumulated losses you should write off, because that is not to be given as a separate adjustment. P&L you write off and all. P&L has to be written off. This is a point. Similarly, when you prepare capital reduction account, normally credit will be more than debit. The difference will be transferred to capital reserve. Capital reduction account balance will be transferred to capital reserve. What if debit is more, sir? Debit is more than credit na, then it is not goodwill and all. That is an indirect information that some items of reserves and surplus are getting used. So thereby, anga indirecta there will be appropriate reserve, maybe general reserve or securities premium is there na, take that particular reserve into the capital reduction account. So it is an indirect information that some more reserves are used. Without giving in the adjustment, this balancing figure tells you some reserve is used. Use that reserve also. Like that we are telling. Our capital reduction cannot result into further goodwill and all, but it may result into capital reduction surplus balance will be normally resulting into capital reserve. Like that we told about the internal reconstruction. Idhula irukra only adjustment yet to be discussed is surrender of equity shares. That is a surrender of equity shares. So equity share capital 1 lakh shares of rupees 10 lakhs. Upon the 10 lakhs to be reduced to 6 lakhs. Okay. One option is retain the number as it is, reducing the 10 rupees share to 6 rupees. That is one option. That is basic accounting entry. Another option is take away 40,000 shares. This remains as a 10 rupees share, let that remains as 10 rupees. We'll take 40,000 shares from them, so that they will be holding only 60,000 shares of rupees 10, 6 lakhs. So we'll take the 40,000 shares, which means shareholders surrender certain number of shares in favor of the company. About shareholders surrendering 40% of the shares in adjustment given, will make the entry as equity share capital to share surrendered account. So that 4 lakhs. But again, automatically the 10 lakhs will become 6 lakhs. But here we will not be cancelling old denomination and all, because denomination not changed, only number of shares changed. So we will simply make the entry as equity share capital to shares surrendered account. Sorry. In the surrendered shares, what I will do, sir? The surrendered shares, what I will do, sir? Surrendered shares can be subsequently reissued or it can be cancelled. Two options. Either can be reissued or it can be cancelled. If it is cancelled, surrendered shares to capital reduction. This is cancellation entry. The first entry what we made was surrender entry. Next cancellation. Suppose reissued, ulta of surrender entry is surrendered shares to equity share capital. But here one problem is there. What problem? When I say reissue, for what purpose you reissue? It may be used as a compensation for a bigger waiver, or it is used for settlement. Two different situations. But explanation is very simple. Creditors 10 lakhs. They are waiving 10 lakhs. And that waiver we are giving 4 lakhs surrendered shares as a compensation. 10 lakhs waived, 4 lakhs compensation. Entry will be waived 10 lakhs. So creditors to capital reduction 10 lakhs. Next, surrender shares to equity share capital 4 lakhs. Like that we make the entry. This is waiver of creditors. Suppose they are not waiving. Creditors of 4 lakhs settled by issue of surrender shares 4 lakhs. Creditors of 4 lakhs settled by issue of surrender shares 4 lakhs. Then also entry remains the same. Creditors to capital reduction 4 lakhs. Surrender shares to the equity share capital 4 lakhs. What we are telling now, whether surrender shares reissued either as compensation or as settlement, reissue only one entry. Ulta of surrender entry, share surrender to equity share capital. What I taught in the class is like this, my dear friends. Creditors amount reduced either as waived or as settled by issue of surrender shares. Both the case, the reduction of creditors will go to capital reduction account. Even if creditors settled also, creditors will go to capital reduction account. Is what I taught in the class. Surrender shares reissue or entry da. Surrender shares to creditors entry always surrender share reissued surrender shares to capital reduction. But creditors waived nalum capital reduction da. Settled in by issue of surrender shares nalum capital reduction da. But creditors settled in cash entry is creditors to cash. Creditors settled by cash payment mean entry is creditors to cash. But creditors settled by issue of surrendered shares then entry is creditors to capital reduction. So this is how I explain. Hope you recall this. Today only you take the surrender shares problem from the workbook and you solve it. Immediately you will be getting it, my dear friends, because when we are committing to this chapter, internal reconstruction, any adjustment comes now, we should be in a position to solve. Everything to be covered, my dear friends. So thereby internal reconciliation, nothing beyond this we have, my dear friends. And balance sheet, when you prepare, it should have the title called and reduce. Okay, balance sheet of so-and-so company and reduced, that word should come, and prepare the simple balance sheet with the revised balances of assets and liability. So internal reconciliation vanda avlo easy, 7 or 8 increase or decrease entries, then prepare reconstruction account, capital reduction account, transfer to capitalism, prepare the balance sheet, like that. Very very simple questions only is expected. So absorption, amalgamation, AS 14 application, para 3G, payments to members alone will be accounted as purchase consideration. Sometimes 5 mark question ko, MCQ question ko, they will give one selling company has equity shareholders and debentures, and we gave equity shareholders equity shares, we gave cash, we also gave debentures. Debenture holders we gave equity share and cash, and for expenses we gave 2 lakhs cash for meeting expenses. So ivlo payment made by purchasing company, these many payments made by purchasing company, but only payment to equity shareholders alone will be added, will be accounting as purchase consideration as per para 3G. Other payments da, but should never be considered as purchase consideration as per para 3G of AS 40. So these are all what I remember from referring the RTP and all. Special adjustments, if you come noticed, you always have time, you can text me. I already given my number. Doesn't mean class is getting over, chuma remembering. So you can text me through the WhatsApp, or you can raise it in the chat box by the Sunday session. 3 revision class edukku phased out of planned na during this period. If you're getting any doubts and all, you can solve. So that is why it is phased out Sunday. Normally rest day da, but still we want to give some time, breathing space. Today's class over na, tomorrow full preparation, like that you should conclude, my dear friends. Okay, so with that we are completing 2 different chapters. Can be 28 marks from this. So 14 marks from amalgamation or 14 marks from reconstruction. Minimum 14, bare minimum 14 plus or MCQ. So 14-16 marks from these chapters, my dear friends. But prepare it very well. So your basic preparation should be or 5 questions RTP, 5 suggested answers. Questions should be solved by night or by tomorrow morning itself, going to the other topics. Okay, sir, or 2 to 5 அப்படின்றது normally energy time தான் full you should spend. But for me, practice of taking class in between breaks, speaking, asking you to solve the problem. So for me, 3 hours speaking is not so easy. So continuous speaking, it is so much of exhaustion. Anala I will take in between a small break, but not now. Around 3:50 I will take a small break. So now I just move into the other topic. Okay. Online friends, are you all there? Okay. Bullet going above head going, are you all following? Just recalling all the points so that it help you to solve the problem. Otherwise you reading theory then solving problem will not happen. Okay. See, financial statement of companies. Those so many things that are getting discussed in the chapter, you should be knowing. Payment of dividend out of reserves, other one segment. MCQ can be tested. Next, basic format of SOPL and balance sheet. Very rarely only they will be testing like the current and non-current classification, that is that difficult level and all, but basically they will give you a trial balance. You should put into SOPL and balance sheet. Outside the trial balance, some notes are given. Some notes might be relating to some plus or minus to be made to the trial balance figure, like depreciation to be charged. You may have to depreciate the asset and take it to SOPL. But many other informations are only normally given as notes. So share capital includes rupees 2 lakhs issued for as bonus. That is only a disclosure requirement. That is not an addition to the trial balance figure. Trial balance figure will have some amount that includes of everything. If the adjustment says outside the trial balance, adjustment says during the year company issued a bonus shares 2 lakhs, that is already there in the trial balance figure. Only thing is you are supposed to show the breakup. Shares issued for consideration other than cash. Then they will give outside the trial balance. Trial balance debtors are there 8 lakhs. Outside the trial balance it is given as out of debtors 2 lakhs debtors outstanding for more than 1 year. That's only the breakup. We would have learned 3 months, 6 months, 9 months, 12 months breakup and all. But relevant breakup given. More than 1 year, remaining debtors are outstanding up to 1 year. Up to 1 year and more than 1 year. Totally 8 lakhs trial balance is there. 2 lakhs is more than 1 year. Remaining is up to 1 year or less than 1 year. Like that, breakup you will be providing. So, you need not have so much worried about should I recall all the notes, sir. So notes, share capital notes, reserves surplus notes, so many things I should learn. Not at all. Basic format learn. 2-3 questions you practice. Even though it came in the last time, still you practice. 1 or 2 questions. Every chapter 1 or 2 questions. Practice, you have time. So you should be practicing to SOPL and balance sheet problem. Anyway, I would like to recall the format. Basica we find a dividend payment out of reserves. Normally dividend will be paid out of P&L. No limit is there. Dividend paid out of profit and loss, then there is no limit. But if the dividend is paid out of reserves means then there is a limit for payment of dividend. What is the limit? We have the maximum dividend can be previous 3 years average. Maximum dividend can be previous 3 years average. You have so much of reserve, but still out of SOPL balance if you want to pay, no problem. But if you want to pay out of general reserve, we are discussing about paying dividend out of general reserve. Now, the ceiling is there. Maximum dividend is only previous 3 years average. Next, 10% of paid up share capital, maximum withdrawal from reserves. This is not maximum dividend payment, maximum withdrawal from reserves. Withdrawal from reserves is the maximum dividend payment. 10% of paid up share capital plus free reserves. When I say paid up share capital, that includes both equity and preference. That's 10% is the maximum withdrawal. Third condition, maximum withdrawal. Even though the law says differently, but substance wise that is also maximum withdrawal. What is that withdrawal? They says that after withdrawal, the reserve should be at least 15% of paid up share capital, which means indirectly they are telling what you can withdraw now, present reserves before the withdrawal minus 15% of paid up share capital. This difference is what said, this difference retained. No. Because I am changing the provision. This is the maximum that can be withdrawn as per third condition. Third condition is not actually withdrawal condition. Third condition is retention condition. But using retention condition, we actually wanted to calculate the withdrawal amount. First what we should do, you should calculate the withdrawal as per the second condition, withdrawal as per the third condition and take whichever is lower. After withdrawing this amount from reserves, one more condition is there. First you should adjust current year loss on. Suppose business is having current year loss, that current year loss should be adjusted. Balance is called the withdrawal amount minus the current year loss is called amount available for dividend. Amount available. Now, if the previous 3 years dividend is less than amount available, and the less amount can be paid as dividend. But previous 3 years dividend is 1 lakh. But amount available is 90,000 na, you can pay only 90,000. Thereby, because previous 3 years amount is 1 lakh, but amount available is 90 na, you can pay only 90. You can't take further because already you have taken every limit. So withdrawal condition already satisfied. You can't go there and take some more reserves and all. This is the order in which first you should be calculating. What is the order in which you should calculate na? First, paid up share capital 10% multiply, that is one withdrawal. Next withdrawal is the total reserves minus free reserves minus 15% of paid up share capital. This difference is another withdrawal. Out of these two withdrawal, we should take whichever is lower. So for example, we have share capital 8 lakhs. Free reserves we are having say 1.5 lakhs. Thereby, my dear friends, so first withdrawal number 1 na, it is 10% of combined amount. So thereby it is 9.5 lakhs into 10%. We can take 95,000. But another withdrawal says that you should leave 15% of 8 lakhs. Which means out of 1.5 lakhs, you take any amount but should really leave 1.2. Which means indirectly telling you can take only 30,000. Only 30. How? So it is 1.5 lakhs minus 8 lakhs into 15%. 8 lakhs into 15% is called 1.2 lakhs. This much you should leave. Leave means left in the company. Indirectly we are telling you can withdraw only 30,000. If you want to satisfy both the condition, you can't take whichever is higher. If you take higher, you are violating the other condition. But if you take 30,000, you are actually satisfying both the condition. Because when we say withdrawal is 95 means that is only maximum withdrawal. You can withdraw less than that also. So thereby we can withdraw only 30. Now goes to compare the first condition. First condition says that maximum dividend payment is 25,000. Now you can pay only 25,000. Even though available is 30, but we can't use it. But 3 years average is 32,000 dividend. Then first condition say you can pay up to 32, but available is only 30 now. You can pay only 30,000. So this is the order in which we will be applying the conditions, my dear friends. So just remember and take one problem and solve it, or solving a not required. Just remember this provision. This is more than sufficient. 2 marks may help you sometimes. Then basically you know SOPL format. So you will have revenue from operations. So revenue from operations, and you also have other income, which will give you total revenue, which means basic trial balance sales. Then usually you will have interest income, dividend income, all those things will be taken as part of other income. Together you will be having total revenue. Expenses, you will have purchase of goods. Raw material consumed, it is opening stock plus purchase minus closing stock. Change in inventories of WIP and finished goods. When we say change, it is difference between opening and closing. So when we say opening and closing means it is plus opening minus closing. Plus opening minus closing. This you do. This difference you find. Our plus opening minus closing you find. So it is 2 lakhs means positive 2 lakhs na. Positive 2 lakhs na. It is an addition to the expenditure. Plus opening minus closing you remember. Now, if you know this is negative 2 lakhs now, that will come as a negative amount in the expenditure side. It comes as a negative amount. But remember, don't take simply difference. It is not closing minus opening. It is opening minus closing. Why is it so? Because opening stock is addition to expense. Closing stock is actually reduction from expense. But thereby, I want you to remember this. Plus opening minus closing. Like that, if you do the mathematical operation, the resulting number may be a positive number or a negative number. Positive na addition to expense, negative na reduction from expense. Like that you remember. Basica, you are actually adding opening stock, deducting closing. You should remember. But we will not do that directly in the SOPL. SOPL will take only difference between opening stock and closing stock. But you should know sometimes the difference will be a positive number, it could be a negative number. So that depends upon which is more. I forget, totally get confused in the examination. Just remember plus opening minus closing. That effect should come in the expenditure side. Finance cost, depreciation, any other expenses. So you will be having employee cost is there, employee cost, finance cost, depreciation, other expenses, all other total expense put into other expense. We will be having total expense. Total revenue minus total expense will give you profit or loss before tax. Tax if you have take it, you will have profit or loss after tax. You don't remember those exceptional item, extraordinary item, discontinuing operation, nothing like that and all. Basic SOPL problem, you will be having only this much. Revenue, other income, total revenue, expenses, you will be having the profit or loss before tax. Sometimes tax may not be there. Like that simple question that will be coming in the SOPL, my dear friends. Dividend and all, if it is only provided for now, you should not be considering dividend and all. So usually dividend adjustment will not come, my dear friends. Absolutely, there is no need for any worry. SOPL past we had dividend adjustment and all. Now you don't have dividend adjustment and all. So like that we should be taking, finding out the profit or loss. Next, balance sheet. Balance sheet format what? Equity and liabilities. Notes, rupees. Number 1, shareholders funds. A, you have share capital. B, reserves and surplus. You are not having in the examination problem involving money received against share warrant. Adhikapra number 2, share application, money pending allotment. So I think time has come for the break. So share application, money pending, adalla illa, nera non-current liability, generally some debentures and all. Here they may give trial balance debenture, usually assumed as non-current liability. If they tell some loans and all, that is non-current liability. Only when the adjustment says, trial balance adjustment says that, see, question la trial balance you have loans totally 20 lakhs. Adjustment says out of loan of 20 lakhs, 2 lakhs is payable next year. 2 lakhs is payable next year. Upon the 2 lakhs will come under current liability as what? Before and all, it used to be called as current maturities of long-term debt, and we used to take it as other current liability. Now that we should understand, it should be shown as short-term borrowings. Latest RTP, I saw a question based on this. Yes, the latest RTP, question number 1, 5th MCQ, today only, that is why I am remembering this. So, that adjustment is there. Appo, long-term borrowing order, current maturity, that is next year maturity, will be considered as short-term borrowing. Originally, it was other current liability, ippa apdi illa, it is short-term borrowing. That is why I thought of stressing that particular point now. Okay, so like that, you will be preparing the balance sheet. Non-current, current, proper classification. Appo, usually you understand, trial balance one number is there 20 lakhs. And they are telling some amount is going to fall due next year. The 2 lakhs is not an addition or deduction and all, just splitting and presenting in 2 different places, or in the same place with the disclosure. For example, trial balance, you are having cash and bank balance, say 5 lakhs. Adjustment says that, so cash and bank balance includes 60,000 bank balance which is with a other than scheduled bank. But thereby remaining 4,40,000 is to be understood as scheduled bank, 60,000 is with other than scheduled bank. That breakup should be shown. Still 5 lakhs will come in the balance sheet. 5 lakhs will come in the balance sheet. You need not learn notes and all. Trial balance information which you can create the notes. Simplest thing. So financial statement you can't miss out. Basic format. Assets you know, non-current asset, current asset. Non-current asset basically consists of the PPE and other various other items. A1 PPE, and you have the intangible asset, capital work in progress, intangible asset under development. You have this non-current investment, then deferred tax asset. So under deferred tax asset, deferred tax liability so separately given, you should net it and present it in the side where it is more. If the deferred tax asset is more, net amount in the asset side. Deferred tax liability is more, net amount in the liability side. Format, how long it is going to take. So learn through the format. It is non-value addition in the revision class, but still chumma I thought of discussing, highlighting that particular short-term borrowings point given in the RTP and all. But otherwise, learn the format, 2 questions, solve it, enough. Financial statement of company, class 20 hours, preparation 2 hours, 10 minutes, revise the format. 40 minutes ku 2 problem, more than sufficient. With that you can put an end to that particular chapter, my dear friends. Okay, so that is what financial statement of company. Amalgamation following ipdi amalgamation, reconstruction, adukaprom financial statement of company simultaneously you complete. Before we meet the Sunday session, in the major chapter should have been completed. Okay, so next day we have cash flow statement. I also want to complete buyback motto kadasiya last day I would like to tell, because that's ரொம்ப important. So Wednesday exam na Tuesday I would like to recall the buyback order provisions. One and the ceiling, maximum ceiling on buyback. You should know debt means that includes long term debt as well as short term debt. In the latest article very clearly they have given some money is payable next year and some money is long term debt, but debt means it includes both short term debt as well as long term debt for the purpose of buyback. So anyway, once again I will recall this provision by Tuesday session, because buyback normally I consider is very important. Cash flow is what very quickly we like to recall. Monday class irukku, Tuesday va exam Tuesday va. Oh, people said Wednesday 2nd. Oh my god. Ayyo, then we will change to Monday evening. Ram dan told. Rama Navinan tharla. Exam is on 2nd and told. Thank God. Conveyed. On the day of exam, no need to meet. Adu venda. Okay, so we will reschedule it. I was just thinking that it is Wednesday exam. Okay. Tuesday exam. Saturday, Sunday, Monday. Anyway, fine. We have this cash flow. From the cash flows perspective, my dear friends, it is very simple. You have simple understanding. 2 methods of presentation, direct method and indirect method. Direct 2 methods. Cash flows means cash inflows, outflows. For business, so many receipts, payments will be there. That's a summary presentation that we understand as cash flow statement. Various inflows and outflows. Previously, one side full receipt, another side full payment, cash flow statement. Later on, they classified this cash receipt, cash payment into certain activities called operating activity, investing activity, financing activity. Like that, 3 activities we are identifying the cash flows. Each activity we will have both inflows and outflows. We'll be having both inflows and outflows. Like that we are understanding. Okay. About investing activity na basic. You need to remember the definition part. Nothing like that. Buying asset, selling asset. That includes even investment. So basically purchase of PPE, intangible asset, investment. This is what normally we consider as investing activity. Basic investing activity. So purchase and sale of these 3 items. PPE, intangible assets and also investments. Sir, whether it's current investment purchase, any investment purchased, marketable securities given, that is also to be considered only as a investing activity only. So because immediately you should not think that marketable security cash equivalent. No. It should be cash equivalent. We'll bring that concept later. Basically investing activity, buying and selling of these assets. Financing activity amounts equity share capital, preference share capital, debentures, loans, related inflows as well as outflows. Both are financing activity relating to these securities, loans, owners fund. You have inflows, outflows, both will be considered as financing activity. all other activities are operating activity. Basically all other activity we can tell, but we can say buying and selling of goods and various expenses incurred full we consider as operating cash flow. Appo presenting cash flow as first operating cash inflow, operating cash outflow, net operating, investing inflow outflow, net investing, net financing. There ends the matter. But after showing operating cash flow, investing cash flow, financing cash flow, to give confidence to the users, reconciliation that we are doing, idoda aggregate form we call this as difference between opening and closing. We call this as net increase or decrease. Idoda aggregate form. Adoda if you add opening, it should match with the closing. That is how cash flow statement format is developed. Seri. Ipo there are two methods, direct method, indirect method. The difference between two methods lies only in operating cash flow. In the operating cash flow, if you can identify the actual receipts from all cash sales, collection from debtors, various payment of expenses, then you arrive at such a real cash inflow, real cash outflow. That is what we are understanding as the operating cash flow as per direct method. But larger organization having lakhs of customers is the problem. So thereby they will prefer the other method called indirect method. What is that? Anyway, we are having SOPL in which so many income and expense netted and finally we get profit. Take the profit, declare as operating cash flow. But profit will be the starting point. When we say profit is the starting point, we will eliminate non-cash items and non-operating items. When we say eliminate, it could be plus, it could be minus. So basic items we will remember. What are the basic items? It is interest payments or interest expense, interest income. When we say இது ரெண்டுமே excluded na, interest expense addition, interest income subtraction, both are called exclusion da. No sir, addition exclusion, subtraction how exclusion sir? Interest already deducted, it is getting added. Interest income na already added in the profit, it is getting subtracted. So there are two forms of exclusion. Then you have profit on sale of asset, loss on sale of asset. So depreciation, amortization, like that you are having basic items of non-cash and non-operating items. Then you after this non-operating, non-cash items will be having working capital adjustments, where we'll be taking increase, decrease in current assets and current liability, which we have learned as inflows and outflows. But we took some time, 1.5 hours we took to tell you it is not actually inflows and outflows. They are only plus and minus to convert accrual into cash. Trading accrual concept is involved, but that should be converted to cash. Whatever given as sales in the SOPL is not fully cash conversion. That should be converted by making adjustment of opening debtors and closing debtors. That's adjustment. But anyway, let us also remember the same only. Let us remember only now. Increase in current asset, it is outflow. For that remember only stock. So stock increase na money paid, so outflow. Upper same principle should be applied for debtors, prepaid expense, every current asset. Similarly, current liability increase na, like as if you are borrowed, so it is inflow. Decrease in current liability, you repaid, it is outflow. Like that you can remember those inflows and outflows. You will be having operating cash flow before tax. Tax payment should be shown separately. Tax paid. Then you will have operating cash flow before extraordinary items. Then you will have extraordinary cash flow. Finally, we will have net operating cash flow. Under investing and financing, like this, two different methods we have. Under both the methods, we will take actual sale of asset, actual purchase of asset. Because whether it's a bigger organization, smaller organization, sale of asset, purchase of asset, loan taken, loan repayment, is a very small number of transactions, so information will be available. But the operating transaction, is sometimes information available, sometimes information not available. Based on that, we have two methods called direct method, indirect method. The final conclusion, direct method means question will give you either pakka receipt payment format like given illa pala information will be given, but definitely all receipts, all payments available. You pick up and drop information, you need not compute anything, so easy to present under direct method in a academical sense. Practically direct method difficult. Academical sense, question will give information about various receipt, various payment, pick up and drop into several activity: operating, investing and financing. Points to be noted. Enalana, in the profit or starting point, it is very important to be known. Some question will give you retained profit, some question will give you PAT, so some question will give you PBT, some question will give you PBD, some question will give you PBIT. You should know what profit you are starting. Accordingly only you can make this exclusion. If it is already given in the question as PBD na, then definitely it is before tax also. Depreciation not deducted, tax not deducted. Appa separate depreciation information given na, the depreciation need not be added back. But if it is given as PAT means, then tax to be added back. Even though tax may be cash item, tax to be added, and because tax should be shown as a very last item of payment, so thereby tax will be added. Then you will also do this various exclusions and all. But if the question gives you balance sheet, if the question gives you balance sheet, and through balance sheet P&L balance you are taking 5 lakhs and 8 lakhs figure na, you are understanding cash flow statement la profit is 3 lakhs starting point and this is dash profit, இது retained profit, which means in this dividend, reserves, everything has been already adjusted. Appo you may have to reverse dividend if any paid, reserves, tax, everything should be reversed. Then only you should go for basic non-cash, non-operating like interest, dividend, interest, profit on sale, loss on sale, etc. Then only working capital adjustment. So these points you should know. Once again, indirect method point enna starting point profit, at which level of profit you should know. Adala what is already added, already subtracted, clarity is there na, then you will easily understand about plus and minus, my dear friends. But it is going to be very simple. Classroom la we would have solved some additional problems involving dividend and all. As I told you, dividend is absolutely not going to cause any trouble to you in the cash flow statement chapter. Practically it is not going to trouble. இது during the year in between adjustment, it is not end of the year adjustment at all. அது போச்சு. So examiners have stopped giving dividend adjustment, my dear friends. Only thing is you should know how to prepare an investment account to find out missing information, how to prepare a plant and machinery account which will give opening balance, or purchase, or sale, closing balance, depreciation balancing figure. Or depreciation information given, they may give the purchase as balancing figure. But you should know how to prepare various accounts to find out missing information. We taught you in the class. What we taught, sir? Forgot, sir. Balance sheet given. Other opening given, closing given for equity and liability as well as assets opening, closing given. Take the differences. Opening, closing difference. Without any adjustments, if the opening closing difference, you know this is the cash flow, now put it directly into cash flow statement. But if you know, if you have some adjustments, now open separate working notes. Take the opening balance, take the closing balance, adjustments information, post it, find out the missing information. Like that we taught you prepare working notes and find out missing information and all. But on the very tough questions, though we solved in classroom, exam not many times tested area and all, basica you should be know how to identify the cash flows into operating, investing and financing. Either missing information computation, preparing cash flow statement, direct method, indirect method, or directly problem, just identification of operating, investing, financing. So I just made you a recall of basic provisions, but problem you should solve. Once again, or 3 to 4 questions you solve, and you get doubts. Sunday you should raise mostly upon the cash flow statement problem, the financial statement of companies problem, and amalgamation, reconstruction in the 4 chapters problem, including இப்போ we would like to take a small break for 5-10 minutes. அதுக்கப்புறம் we'll be continuing. அப்போது investment accounts also will be இந்த 5 chaptersோட ப்ராப்ளம்ஸை you should be solving. இன்வெஸ்ட்மெண்ட் அக்கௌண்ட்ஸும் முடிச்ச அப்புறம் ஐ வில் பி ஃபோக்கஸிங் ஆன் ஃபியூ அக்கௌண்டிங் ஸ்டாண்டர்ட் லைக் AS 10, 16, 22 இந்த மாதிரியான ஏரியாஸை அக்கௌண்டிங் ஸ்டாண்டர்ட்ஸ் ஐ வாண்ட் டு ஃபோக்கஸ். ஸோ ஒரு 4-5 செட் ஆஃப் அக்கௌண்டிங் ஸ்டாண்டர்ட் லைக் தட் we are going to plan till 5 o'clock. இப்போ 10 minutes break ஒரு 4-5 வில் மீட். ஓகே ஃபைன். இது ரொம்ப லோவாக இருக்குது சார்ஜ் லோ. ஓ இதுதான் பவர் மோடா, இது இல்லையா? ஐ தாட் இதுக்கும் மெசேஜ் வந்ததோ இது மெசேஜ் வந்ததா? டேப் தான் வந்தது இல்லை. சென்னை வண்டி. ஓஹோ staying in Chennai, waiting for exam in Chennai only. Yes, sir. How's your preparation? Preparation going well, but for group 2 in audit and SM I am not confident. Other subject I am
for conditions. I was busy listening what sir is saying. I'm not able to make the time this works. That comes with practice. And we also have intangible efforts manuals in CPS. I've done it to 2021. And I also am from a state board as well, so I am not state board. Also, I would say I am a corona with it. Even worse. So you didn't write the exam? No. You did just really work? I have only prepared only for the accounts and which was the math subject. This subject only I prepared. I haven't studied English, business studies, and other subjects. If I was a if the exam was going to happen, I would be failed. I would be only able to score in accounts and math. There are no certificates. It's okay. And everything was that I was in my hometown. And there was no teacher. Even the account the teachers I was studying from accounts. He was like he didn't explain anything. Just he gives some English and like then do it like that. And he is a professor of like our college. I don't know why they teach us like that. Why did you go to college? No, I haven't studied in college. I don't know. I didn't even go to college. In college, teacher will like come to college, give you internal only. You even take a book and whatever you want to do, just do and just give me and go. Oh, which college is it? Jharkhand college. It's a theater from It's actually nearby my house, so I don't have to go much. You're preparing for foundation? Yeah, at that time I was preparing for foundations and clear, then I was preparing for intermediate. I given then clear, then I focused first clear graduations, and then next year my brother clear, so I didn't prepare anything. Then after that I just came with the time. Good. Good. So after this you have to go for architecture. Where are you planning to go? Wherever I get more exposure to the accounts and tax, audit, whatever, whichever is beneficial to me. I love to it, right? You have thought of any field you want to expertise in? Like I want to be an expert in audit or in accounting standards or in direct tax? I would say in audit, I haven't thought of that. Oh. I haven't given thought about this. But I am pursuing clearing intermediate. That's my only focus right now. How about you? For me, I want. Are you applying for Big Four? Yes, Big Four. That's why you are going for both the attempts. Yeah, I want to go into Big Fours, and I'm planning on specializing in forensics and fraud investigation. That's good. Yeah. And you can apply for the government will also after clearing, like Adv Acc roles. Yeah. But I don't want to get into a government job. I'm planning on doing that. There's this exam called CFE, Certified Fraud Examiner exam, which you can very happily register. After clearing intern. But it works on credit system, so you need 50 credits. So how would I get 50 credits? Like, what are the conditions? 40 credits you will get if you have finished your bachelor's and your CA exam. Yeah. This together is 40 credits. Only when you have 40 credits, you can write the exam. Okay. And if you write and clear the exam, the other 10 credits is from your articleship. So if you finish 2 years of articleship in CA exam, you will get 10 credits. Okay. Then I will be eligible for CAE. CFE. So CFE. focused on wanting to do your own practice at some point in time, I have to go for mid-size firm, because there you will learn everything, be it audit, be it tax, you'll handle everything. So if you want to learn mid-size firm, but if you're looking only for the tag, big fours. Then I will go to mid-size firm. And even mid-size firm, we have really good firms. Yeah. Which I'm sure Jaison sir himself has his own firm. He should know some good. There's one firm called Shriram and Co, which is very good. There's P. Ramasamy and Co firm, which is also very nearby, all here in Manapam. First, let's focus on clearing the intermediate. I'm afraid about that. Yeah, 3 days just for your exam. I'm having headaches. I know. That's why I quit. It's like 26th of July we have completed our classes. Then till today, I don't feel, doesn't feel like just go on. Yeah, it's been 2 months. And it's just feel like just go. Yeah, it was very fast. For me, the whole time also is only like a few seconds. I think I want to go anywhere to explore channel. Explore. You can explore IC, right? You have ICS study hall is there, library is there. This one? Yeah. I haven't been. I think you've been there. Yeah. That's where I am. My entire day I spent there. Always frustrating, I'm not getting any exposure. So my mind is constantly study. Is it like that? But after winter, you have some time to explore, to go out. I will go out first. Wow. I will go and see my niece first. Oh, yeah. I think I've seen a picture of him. You want to see? Yeah, I think you put it on Telegram. Yeah, there is your born. Niece is your brother's daughter. Yeah, that's why I was whether I know I have told you before or not, I don't know. I was planning to go, but my brother went to home, so I didn't go. How old is your brother? My brother is 27. Yeah. 4 years older than you. Yeah. And he is a child. Yeah. When are you getting married? First let me settle. I don't even, I want to cover my own expenses. I will marry if they gave me dowry to settle. But I think generally they get you married very young. I think no. Yeah. Yeah. I have seen many of them. I don't want like a racist like that. Yeah. They will come after class. Okay. Okay. Even if it is around 16 or 17 days, by the time they were in say 9 or 10. Okay. I have that they got married. Yeah. I don't know why. Just for fun, they get married. No. There are other things like that. I don't know. When are you planning to get married? After I'm getting settled. After all my 5 years? 5 years. When I clear my first year. 5 years. Yeah. 3 years will clear. 3 years clear. 2 years to yeah, 5 years. After 5 years. 5 years. After 5 years. 5 years. Before 30s. Yeah. Before.
சார்ஜ் ஏறி இருக்கு. வேறு சார்ஜ் இருக்கும்ல. ஸ்டார்ட் பண்ணலாம்ல. So my dear friends, welcome after the break. Investment accounts AS 13. Though we have taken as a mega chapter and all, maximum 7 mark question can come. Basically AS 13, accounting for investments. We classify the investments into 2 categories. Current long term fixed variable income bearing securities. But debentures, bonds, these are all fixed income bearing securities. Basically when we say accounting for transaction like purchase, sale, receipt of interest, receipt of interest, transfer of interest. Like that we have simple 4 accounting entries we have to learn. We told you when we took investment accounts, basically the complication arises because of when we are buying investment, we are paying money for investment and also some accrued income. So some facts only we should be knowing. Basic facts what அப்படின்னா, a company which is giving interest will not pay interest proportionately to the person who is holding debentures during different period, will give full interest to the person who is holding the debenture at the time of payment. அப்போ ABCD was holding the debenture of the same company during the same year for 3 months, 2 months and 3 months, 11 months. E was holding only for 1 month, but E will get ultimately 12 months interest. That's the basic concept. Appo thereby it is always seller who will be smart enough to collect his whatever interest he deserves from the buyer. And naturally buyer will pay. Basic concept is when we buy investment, we are paying money for investment and also for some accrued income. But the payment towards accrued income should not be part of cost, because AS 13 says that cost should exclude a pre-acquisition income. If it is fixed income bearing securities, when we buy itself, very clearly we can identify how much money we are paying towards interest. So thereby accounting entry is always investment debit, interest debit to bank. This is the accounting entry we make for buying. And then immediately brings the concept of X interest, cum interest. X interest na excluding interest, cum interest na including interest. It means what means? Interest should be given, interest need not be given illa. That is not the meaning. Question la one amount is there. And the amount, suppose purchase for 3 lakhs, X interest na 3 lakhs interest not included. Purchase for 3 lakhs, cum interest na 3 lakhs interest is already included. This is the meaning. Whether X or cum, you have to pay interest. Buyer, you have to pay money towards investment, money towards interest. Sorry. What is the basic understanding? If the question says that purchase for 3 lakhs X interest, and the 3 lakhs is the investment value, then interest should be independently calculated. And the interest independent calculation by applying 2 rules. What are the 2 rules? One is it should be calculated on face value. Interest should be always calculated on face value. Interest should be calculated for a period from last interest date to the date of transaction. What is that last interest date to the date of transaction? Or a company in which we are invested and the company paying interest every 31st March. I am buying the investment on 1st August, 1st August 26, 31st March 26 to 1st August 26. I should be calculating. Suppose that company paying interest every 31st March and 30th September 2 times, and I am buying on 1st October means, 1st December means, then before 1st December, the last time the company paid interest, not 31st March, but on 30th September. I should be calculating October, November, 2 month interest. The basic concept is interest should be calculated always on face value. Interest should be calculated from last interest date to the date of transaction, which is independently calculated. Together is the bank value. So 3 lakhs plus the interest amount. If the question says purchased for 3 lakhs cum interest, entry adeda, amount will be different. What we write is that the given amount we will write against bank. You 3 lakhs plus the interest portion, but if it is cum interest, 3 lakhs is the total payment. So the 3 lakhs includes interest. Interest is independently calculated. Cost is the balancing figure I will be arriving. So that's the concept. X interest, the given amount against investment, interest independently calculated together against bank. Cum interest, question amount will be written against bank. Interest is independently calculated. So the bank amount minus interest, investment value. Like that we are understanding as purchase entry. Same like purchaser ulta will be making the sale entry. But when you make the sale entry, it is bank debit. What is the bank debit? Credit investment, credit interest. Bank debit proceeds. What is that proceeds? Whatever total cash you are receiving. Which means question says sold for 5 lakhs X interest, then 5 lakhs plus interest portion. Together you will write against bank. Sold for 5 lakhs cum interest, 5 lakhs the interest included. So you will write the 5 lakhs directly. But in the journal entry, investment will be credited not based on the sale information, but based on the book value of the investment, which is determined by applying either FIFO or weighted average. And if generally nothing is mentioned, it is always weighted average, not FIFO. Always weighted average. For the investment accounting, it is weighted average. Like that, you calculate book value, then interest again independently calculated, then still difference comes. The difference will be considered as profit or loss on sale transaction. This is the basic sale transaction. Purchase entry over, sale entry over, X interest over, come interest over, then receipt of interest, no trouble, total interest entry, bank to interest. When we say total interest, if they are paying 6 months, 6 months interest. If they are paying 12 months, 12 months interest. Not on the latest purchase investment, you should calculate for all the investment you are holding. Suppose you may have opening balance. You purchase now one. So total debenture you will be receiving interest, bank to interest. Then interest will be transferred to P&L. If you are making only journal, the basic concept is credit interest minus debit interest. Ledger account automatic balancing figure the interest account. Like that we explained the basic 4 entries relating to the investment accounts. Apo it is always investment debit, interest debit to bank. Question says X interest, right against investment. Interest independently calculated, together written against bank. Question given, come interest. And the amount written against bank. Interest independently calculated. Independent means what? 2 rules application. On the face value, last interest date to the date of transaction. This is simple விஷயம். Okay. Next, my dear friends, when it is present in the form of a ledger account, the same present in the form of a ledger account, we'll have the format like this: date, particulars, it is face value, interest amount on either side. Then what we told we'll be posting, actually interest column represent interest account, you should know 2 accounts you are presenting. So if it is opening balance 1st April, 2 balance brought down, face value amount represent quantity column, record the relevant face value, record the relevant opening balance given in the question. Generally interest will not have opening balance. But sometimes the interest column will have opening balance when accrued interest comes, opening balance will be there. So what is the accrued interest? Whenever our accounting year ending payment of interest not matching, then there will be accrued interest at the end of last year, which is actually reversed at the beginning of current year, but that reversal not shown by the institute books. It is shown only as part of opening balance and closing balance. We will also present like that only. If you have accrued interest, show it as part of opening balance and closing balance. Whenever you take opening, closing, you will also have balance in the interest column, which is actually reversal of accrued interest, recognition of accrued interest at the end. Anyway. Next, when you have a purchase and all, directly you will write to bank, relevant face value will record, interest will be independently calculated, that will be recorded. And suppose you are posting directly in ledger account, then come interest given amount minus interest you will post. X interest given amount directly will be posting in the amount column. This is the concept of posting. But come interest given amount minus interest, because that is the investment value. X interest given amount itself is investment value. Like that will be posting in the ledger account. But when you post a sale transaction, then it is write the date by bank, relevant face value, independent interest, what amount should be posted? You will be posting the again sale value only, not book value. Journal it is book value determined by FIFO or weighted average. Ledger you will be posting only the sale value. Sale value question given amount that depends. Question selling sold for come interest the given amount minus interest. Question telling sold for X interest given amount as it is will be posted. Then we will have a separate working note for computing profit or loss on sale, where we will be comparing net sale value. Net sale value sale value minus sales related expenses like commission brokerage. Commission brokerage purchase should be added, sales commission brokerage should be subtracted. Net sale value will be arrived. Then we will calculate proportionate carrying amount by applying FIFO or weighted average. FIFO means first purchase investment, first sold. Order you should know which investment is getting sold, other corresponding cost you should find out. Weighted average total cost by total debenture into number of debenture sold. Like that, we'll be calculating proportionate book value and we will be finding out proportionate carrying amount, differences, profit or loss. After computing profit loss, how to post into ledger account? Loss means we'll be writing by profit and loss account in the amount column. Profit means it is to profit and loss account in the amount column. Like that, the posting will be made. This is what we experienced by making journal and ledger account for fixed income bearing security. Fixed income bearing securities oda basic transaction தான் mention பண்ணிருக்கோம். So too many, though we have taken 15-16 hours, quick recalling of what we have done. Try one or two questions. One question sufficient, not more than that, my dear friends. So then variable income bearing security, say when you have shares. Many times shares are tested. That's very simple. When you buy, when you sell, investment in equity shares, no complication whatsoever because the dividend X come concept not there. So basic entry for buying shares is investment to bank. Selling shares is bank account debit to investment. You will have difference which is nothing but profit or loss. This book value, this sale value, difference is profit or loss. So buying, selling, you don't have any complication if it is investment in equity share. When we say investment, it is investment in equity shares. But when we get dividend, we classify the dividend into pre and post. And if it is post acquisition dividend, if you know now, then it can be credited to dividend account and goes to P&L account. But if it is pre-acquisition dividend now, it is considered as recovery of cost. Means it will be credited to investment account. Now, basic accounting for pre means what? Recovery of cost. It should be taken in the investment account. Amount column we should be recording. But if it is post-acquisition dividend now, its income will be credited in P&L. We can simply mention in the notes or you can show a dividend column and show it in the dividend column that amount. But basic question arises how to segregate this into pre and post. When you get dividend, identify two things. One is called dividend period. You should identify the dividend period. So definitely a question should tell this dividend is for this year ending dash date to dash date dividend. Then we should also know when we purchase the shares. We purchase the share, say this is 25, 26. This is 26, 27. You have 27, 28. We purchase the share in the year 27, 28. But we are getting this year dividend. How come? How come you are getting dividend? Because dividend of 1 year getting paid in the subsequent year. About the type of payment I am having the share. But last year I was not holding the share, but still I am getting the dividend. I understand my purchase is in the year 27, 28, but dividend is relating to 26, 27. In that case, this dividend is dash dividend. This is pre-acquisition dividend. Suppose I purchase the share in the year 25, 26. And I know dividend is for 26, 27. It is fully post-acquisition dividend. Sometimes it could be partially pre, partially post. How abdina? I purchase somewhere by 1st of August 26 and I am getting dividend for 26, 27. In that case, dividend from 1st April to 1st August is pre-acquisition. Dividend from 1st August onwards it is post. Our basic pre-post classification is based on two information. Which two information? Dividend period and date of purchase of share. Very clearly will tell you whether it is pre or post. And if it is pre-acquisition, recovery of cost, post-acquisition means dividend account. That's all. Very simple accounting. About bank to dividend, this is for post-acquisition. Bank to investment, this is for pre-acquisition. Like that we are understanding dividend treatment. Same way we understood about the next event, special issues of shares called rights issue and bonus issue. This is getting shares directly from company. Normally when you buy shares, it is always on the market now. Suppose it is given, Singh purchased the shares of X Limited. Singh never purchased from X Limited. Singh purchased only from market. So if it is from company na, it should be either rights issue or it is bonus issue. If it is bonus issue means simply receive the share for which no journal entry will be made but will be posted in the ledger accounts in the quantity column alone. Originally I purchased 5,000 share by paying 5 lakhs. Next time getting another 2,500 shares free of cost na, record only in the quantity column, nothing in the amount column in the ledger accounts. Journal entry illa because I received a free share, idukku no journal entry. Company issuing bonus will make journal entry, but company receiving bonus shares will not make any journal entry, only posting into ledger account. Ipo enna 7,500 shares will be given a cost of 5 lakhs. Originally I purchased only 5,000 shares for 5 lakhs. I got free 2,500 na, adukku journal kadayadu, ledger la amount la posting illa, only in the quantity column. Now I will say 7,500 shares costing 5 lakhs rupees. But if it is right shares la, we have two situations. I don't have the third cancellation situation venda. Rights exercised, rights transferred. Rights exercised means I am paying money to company and getting share. So that is normal purchase entry, investment to bank. Whether I am buying from the market or buying from the company, doesn't matter, same entry will come. 15 hours, 10 minutes explaining. So investment to bank, same entry, no problem. But if it is rights transferred to some third party, I am getting some income na, usually the income in P&L da. Usually income in P&L da. But if certain conditions are satisfied, particularly two conditions are satisfied, then the rights income can be treated as recovery of cost. So when is that? Two conditions. One is the original shares acquired on cum right basis. Our question should tell this. This we can't find. Question should tell original shares acquired on cum right basis. Number one. Number two, after rights price reduced. After rights market price of the shares reduced. If these two conditions cumulatively satisfied na, then rights income will be treated as recovery of cost. In that case, that will be taken in the amount column of investment. If it is only income na, if it is only income means, then it will be shown only as a note, it will be credited in P&L. So Jarko friend reminding us the point, sir, sometimes even though two conditions satisfied, fully we may not be crediting to investment account, only to the extent of the reduction. For example, sir, so there is a reduction in market price given in the problem as 40,000. Your rights income totally 50,000. Rights income totally 50,000 na, only to the extent of 40,000 you should be treating as recovery of cost. Remaining 10,000 you should be taking only as income in P&L. But suppose your rights income is 30,000 only. In that case, entire 30,000 will be treated as recovery of cost. But what about remaining 10 kadayadu, because our understanding is accounting for 30 da, not accounting for 40,000. Based on the reduction, we decide how to account rights income. That's all. So thereby, we should check that also. Basically, we got that points and all. Sorry. Upon the pre-post dividend, some conditions should be satisfied. Rights income to be considered as recovery of cost, condition to be satisfied. In the condition should be crystal clear in the problem. Assumption based money, you can't take it as pre, you can't treat it as recovery of cost. In the information, something is lacking now, always dividend income. Always rights income also income in P&L. Nothing is recovery. Recovery aganuna, and the dividend two information should be crystal clear. Dividend period, date of acquisition. Adhe mari rights information should be pakka clear. What information? Original shares acquired on cum right, market price reduced, like that crystal clear information available na the recovery of cost. Otherwise, always assumption we can do only for treating them as income, like that we are understanding. So simple things na. So you present ledger account for that also. Normally date, particulars, number of shares, not face value. Many times you don't calculate interest, number of shares, amount. But if you have dividend also, you can also have dividend column. But in case you have dividend, still you need not have dividend column. You can simply mention dividend received will be credited to P&L account, because only one time you are receiving, not 10, 20 times. Always normally we present only date, particulars, number of share and amount column for investment in equity shares. Like that we discussed. That way purchase entry, sale entry over. then usually whether it's debenture or this equity share, final closing balance you arrive na, closing balance you arrive in calculator, don't take it in the amount column, take it to an working note called valuation, and you say what you arrived in calculator is cost, which is called as balancing figure in investment account, and question would have given fair value. You should take out of these two whichever is lower, that amount now you should be recording in the amount column, and if fair value happens to be the lower value na, you will have some difference in that account. The difference is called valuation loss, which is transferred to P&L account. But if the cost is the lower value, no problem, you take the cost, there won't be any further balancing figure. But you should do this exercise called valuation. So that is what we are understanding in the investment account. Suppose purchase, sale, in between receipt of dividend, interest and closing balance valuation. இது இல்லாமல் AS 13 இருக்கிற எக்ஸ்ட்ரா ப்ரொவிஷன் தான் கிளாசிஃபிகேஷன் அண்ட் ரீக்ளாசிஃபிகேஷன். அப்போது இன்வெஸ்ட்மெண்ட் கிளாசிஃபை இன்டு கரண்ட் இன்வெஸ்ட்மெண்ட், லாங் டேர்ம் இன்வெஸ்ட்மெண்ட். That is based on intention to hold for up to 12 months na current investment, intention to hold the investment for more than 12 months na adu long term investment. ஒரு சம்பந்த எக்ஸாமினேஷனில் ஜென்ரலாக இன்வெஸ்ட்மெண்ட் இன் இந்த கோல்டு சில்வர்லாம் நார்மலி கன்சிடர்ட் அஸ் லாங் டேர்ம் இன்வெஸ்ட்மெண்ட் தான். But equity shares na question should tell whether it's current or long term. So we should give conditional answer. Current means market value we will consider. Long term na market price we will not consider. Our valuation rule what? Current investments na cost or fair value whichever is lower. Long term investment always only at cost unless there is a permanent decline. Permanent decline na we will take the declined value. Definitely you remember these things and all. You may feel like you're forgetting, but technically it gets naturally to you. Then you have reclassification. Reclassification do na two types only, current to long term to current. We told you in the Indian captain's example under current to long term na we'll apply one more time current order principle, which is cost or fair value whichever is lower. Long term to current na cost or carrying amount whichever is lower. The RTP I found the latest RTP reclassification related problem, so I thought of reminding you that also. These are the things what we did in the investment account. Just started 20 minutes 20 hours topic we have completed. So AS 13 investment rules, and fixed income bearing security, variable income bearing security, fixed come interest, ex interest concept here. In the dividend pre-post rights income treatment, all these things discussed. Is related. One problem on rights receipt. One problem on fixed income bearing security. In other words, RTP all investment problem you solve, that is more than sufficient. 5 chapters. ஒரு சாப்டரும் RTP have presence. அப்போ ஒரு chapter 5 questions 25 questions you should be solving, because first to focus on these major chapters. அப்போ இதிலேருந்து டெஃபினட்டாக ஒரு 40-50 marks are covered. Amalgamation, reconstruction and financial statement, cash flow, investment. இது மட்டும் இல்லை, consolidation சேர்த்தா தான் அந்த 55 marks will come. Consolidation definite mark. But today only I don't want to load you with the consolidation. Sunday will be loading you with the consolidation. Sunday rest day அப்படின்னு ஸ்பெஷல் டே ஸ்பெஷல் ஃபுட் அப்படின்லாம் எடுத்துக்காதீங்க. நார்மல் லைட்டர் ஃபுட்டில் யூ ஷுட் பி டேக்கிங். அந்த டைமில் வில் டேக் கன்சால்டேஷன், லிட்டில் பிட் ஆஃப் பிரான்ச் அக்கௌண்ட்ஸ், ஸோ தட் ஐ வில் நாட் ட்ரபிள் யூ மச். ஆன் டியூஸ்டே செஷன் இல்லை, ஐம் கோயிங் டு சேஞ்ச் தட். இட் வில் பி ஆன் மண்டே இட் செல்ஃப். அப்படியே மெசேஜ் வந்துருச்சா? ஓகே. ஆனால் மார்னிங்னு வந்திருக்கா? 7 to 9 இருக்கும். But anyway, we'll announce it on Sunday how the sessions will be, so that ஒரு overall discussion about all the standards, அப்புறம் approach, அந்த மாதிரியான விஷயங்கள்லாம் தான் நம்ம will be doing on the Monday session. I thought Wednesday exam நினச்சிருந்தேன் ஒரிஜினலாக, Tuesday exam நம்ம Monday நம்ம மீட் பண்ணி பண்ணுவோம். But mostly all the discussions will be completing on Sunday itself. Okay, so anyway, அப்போது 5 chapters completed. Consolidation branch will be done on Sunday. Buyback definitely last class, 10 minutes are required to tell you the maximum ceiling on buyback, but I want you to remember fresh. So thereby I would like to do it only on the last class about the buyback. About 8 different mega chapters, 5 chapters are a quick revision completed. We are just moving on to few series of accounting standards. Primarily, I would like to focus on asset-based accounting standard, because most of the times MCQs are based on asset-based accounting. Only 12, 16, 10, based on that only we find many times MCQs are coming. So we like to focus on that standards. Okay. Friends, are you there? Following? Okay. In the thumbs up the missing on the that was fine. So it is AS10 PPE, 10 things, subjective, scope, meaning, accounting issues, initial recognition, subsequent expenditure, subsequent recognition, subsequent change in liability, special issues, depreciation, de-recognition, like that. So many blah blah things. Adala forget. Basic problem areas. They may ask you, what is cost of PPE? One problem area. They will give you many information about expenditures. They will ask you finally what amount PPE should be initially recognized, which is nothing but cost. Next, we are having subsequent expenditure, other problem area. Next, most of the times depreciation based problem. இதோட next grade தான் they will ask you revaluation profit or sometimes. இவ்வளவுதான். இதான் மேஜரான problem areas from AS10. Though we would have discussed in 10 to 12 hours about bearer plant, what grape. So basically, what is cost of PPE? Cost of PPE depends upon how PPE came into existence. If it is acquired for cash, then it is purchase price, directly attributable expenses, PV of dismantling liability. These three together we are understanding cost of PPE acquired for cash. Purchase price, we should understand it is list price. Purchase price breakup. List price minus trade discount, if any. We should not take a cash discount. We should take only trade discount. Non-refundable duties and taxes. Though I am making plus minus formula, you should not learn this as plus minus formula. You should remember as inclusions and exclusions. Why, sir? Why don't I remember as plus minus formula? Na? Examination, I find each time different problem. Suppose it is given as purchased machinery for 14 lakhs. And they are telling including GST of 2 lakhs. Then they are telling GST is refundable tax. What I should do here? GST, should I add or subtract? Purchase machinery 14 lakhs. They are telling including GST of 2 lakhs. And GST is refundable tax. Refundable tax na AS10 provision and refundable na not to be included in the cost. Only non-refundable tax should be included. Refundable tax should not be included. But it is already included. What I should do? Subtract. I should do subtract. Mathematical operation, subtract. Suppose it is given GST is non-refundable, like that mentioned, then non-refundable, I want this to be included, but question ladhu already included. What I should do? Don't do anything. That's already correct. Suppose in some other problem they have given purchased machinery for 24 lakhs. GST paid, it is 3 lakhs. Purchased machinery for 24 lakhs. Adhikaparam GST for the machinery paid 3 lakhs separately given. In the 3 lakhs is not included in the 24 lakhs. Now they are telling GST is refundable. GST is refundable. Refundable not to be included. AS10 says not to be included. What is question says? So far not included. Not to be included. So far not included. Do nothing. But suppose they are telling GST is non-refundable. Oh, non-refundable, it should be included. Appo AS10 says it should be included, but question is so far not included. It should be added. அப்போ ஒரு சம்மில் we are telling GST subtract, இன்னொரு சம்மில் GST add, like that you should not get confusion. அப்போ you decide plus minus based on two things. One, AS10 provision should come to your mind, then question or facts should come to your mind. Based on these two only decide whether it is plus or minus. You can't simply learn formula as plus and minus. Question will give you ஒரு paragraphல so many expenses relating to PPE. அதில் some items will be added, some item will be subtracted, some item சும்மா left, well left. So you should not ignore it. அப்போ இந்த 3 actions is based on pre-condition formula இல்லை, it is based on provision and facts given in the question. இது ரெண்டும் based தான் you can decide whether it is plus subtraction or it is ignored. Like that you should be knowing. Basic, you should know purchase price consists of list price minus trade discount and including non-refundable duties and taxes. Basically, import duty na question need not tell. If question does not say anything, it is always non-refundable, and GST na generally considered as refundable. We are already studying GST subject, but generally consider GST as refundable. But question la specific GST mentioned as non-refundable, it is only non-refundable. Otherwise, assumption I am telling you, my dear friends, import duty, customs duty given na non-refundable. GST means refundable. Like that you should understand. Idella I thought of clarifying to you. Directly attributable expenses. Question standard listing out what all directly attributable expenses. Employee cost, our own employees, supervisor, technician, salary, etc. Next, it is site preparation cost, leveling the ground, creating extra platform, fixtures, cost of site preparation, delivery and handling cost, transportation cost, unloading charges, etc. Installation and assembling cost, professional fees paid to designer, engineer, architect, etc. Then trial run cost or pre-production cost, net of proceeds from trial run. These are all called directly attributable expenditure. அதுக்கப்புறம் dismantling liability oda present value given, that should be considered. Sometimes they will give you gross amount and discount rate, which you may have to discount it. Sometimes they will give directly PV of dismantling liability. All these amounts to be added to arrive at what is the cost. Cost we have exclusions. What are the exclusion? If any amount spent for introducing new facility or new product, relocation one place to another place, staff training cost, general administrative overheads. Suppose we are self-constructing one PPE, it is material, labor, overheads. Everything should be included as part of cost. அப்போ question specifically given is general overheads na, அது not to be considered. So otherwise question says that specific overheads na, that has to be considered. Or question simply mention overheads, should be considered na, should be considered. Only when they mention general overheads na, that is not to be considered. Similarly, self-constructed PPE, we told material, labor, overhead should be included. Anga specific two things are mentioned. Abnormal cost should be excluded. Similarly, internally generated profit should be excluded. But when you buy the materials, material poor quality, spoiled goods, wasted, not returned, wasted na, adu abnormal cost. Good quality material used, but it is related to wrong planning, default construction, then also the material cost will be considered as abnormal cost. Two form of abnormality. One is because of material becoming waste. Another one, material is used but is related to default planning, default construction. Then also it is only an abnormal cost. Like that we are understanding, right? So that way we are understanding abnormal cost should be excluded. Also excluded internally generated profits. So that is how we are understanding about the cost. Cost fully not completed. So exclusions, inclusions எல்லாம் பக்கா over. ஒரு basic question என்ன, ஒரு paragraph ஆவோ இல்லை 8 to 9 information relating to some cost will be given. We should know what to plus, what to minus, what to exclude. Then if you do exchange transaction, we should recognize that fair value. Which fair value? acquired asset fair value or given up asset fair value, whichever is more clearly evident. That should be given by the question. If normally nothing is mentioned, now fair value of asset given up is the cost of asset acquired. Then sometimes if the question does not give fair value, we will be recognizing only at carrying amount of asset given up. Sometimes fair value given, but question mentioned that transaction lacks commercial substance given. What is commercial substance? Forget it. Question says transaction lacks commercial substance. Then also you cannot use fair value. We should use only carrying amount of asset given up. So that is one point. Next, another point is that suppose I acquired PPX, I gave PPY. This given, this acquired, this given. Appo PPX should be recognized at fair value of PPY. Suppose along with this I give cash also, then fair value of PPY and cash together the dash cost of PPX together. If I give these two assets, two assets of fair value together the cost of PPX. Then credit PPY not at fair value but only at carrying amount, because outgoing assets should be credited only at carrying amount. Incoming asset should be recognized at cost, which is fair values of assets given up. One asset given up, one asset at fair value. You give asset and cash together you should be recording. Like that we are understanding, my dear friends. Very remote in the exchange transaction, but you should be remembering these points, my dear friends. With that we are understanding about the cost. What is cost? Remember all those exclusions, all those inclusions. But don't remember like a fixed plus, fixed minus, because question setter might play with the English statement and sometimes knowledge wise அது மைனஸாக இருக்கலாம், but it may have been already not included in the information given the question. You don't do the further subtraction. So be careful. Astent provision remember include exclude. Question அது already included or excluded. Based on that you decide plus and minus. Like that we are understanding about what is cost. Next, subsequent expenditure. Remember, you have normal service cost, we will call this repairs and maintenance expense. You replace one major part. One part replace அது major or minor அப்படின்றத question gives some parts information நால அது major தான். Practically we will decide major minor, but here it is any part separate information given major தான். Inspection cost. These two costs should be capitalized. Repairs and maintenance, it is only expense. So this expense relating to an asset, service cost always charged in P&L, but if you replace any part, that should be capitalized. Angadan difficulty eல்லாம் கிடையாது. So what do you do? Today you are incurring extra 60,000, just add 60,000. Old part you are removing and physically throwing. Physically thrown alone not sufficient. Books கூட you should throw. Books and the old part of the value might be included, that you should be removing. Adukku either you should have been knowing the breakup of that old part. If you don't know the old breakup of old part, which is many times you don't know. Why you don't know? Because when I purchase a new brand, new asset, never we had a breakup price. This part this price, this part this price, and that breakup value I don't know. What I should do? It is discounted, depreciated, discounted current cost should be used. Adu enna sir? Today you spend 60,000. But this was actually, if purchased 4 years ago, what would have been the price? Adukku I should be first doing discounting. I will be getting the cost before 4 years. But I am subtracting the old part not at the year 0 but at year 4. This should be further depreciated. So first it should be discounted, next it should be depreciated, then it should be deducted from the present carrying amount. Because suppose we solve one problem involving road trailer. So 1 lakh was the cost, already charged 60,000 depreciation. So present book value 40,000, new cost was 45,000. 85. Then what we did for this 45,000? In the 45,000 45,000. First we discounted, we got some 33,000 and all. Then again we depreciated to arrive at the reduction amount. Some students used to ask me, sir, why here also depreciation, here also depreciation? No, we want to actually reduce the amount what is included in 40,000. If you discount the 45,000, you are getting the amount included in 1 lakh. I want to know what is the amount included in 40,000. Today's carrying amount, what is included, I want to know. I first discount it. I got some 30,000 and all, which I further depreciated. I get an amount of old part, what is included in the 40,000, that I de-recognize. Like that, we'll find out the revised carrying amount, one of the important examination area. Either proper question or MCQ can be tested. Depreciation. Depreciable amount, method, life, idan depreciation affect agara factors. Depreciable amount cost minus residual value. Cost minus residual value. We told you many times, method of depreciation, SLM, WDV, SYD, production unit, mission hour, so many methods. But that methods is not your choice. That's the condition. What condition? Method should reflect pattern of benefits. When you use an asset, you get some benefits. And the benefit or a pattern you should estimate. If the pattern is equal, depreciation should be equal. Benefit is keep on reducing. Now, depreciation should keep on reducing. No, benefit keep increase, decrease based on usage. Now, then depreciation should also increase, decrease. In other words, depreciation should reflect the pattern of benefits. Accordingly, you should be choosing. Thereby, we call depreciation method itself as an estimate. A method, if it is changing now, it is going to be called only as change in accounting estimate. So you should be remembering 2 marks, many times it can be tested. So like that we discussed it. Sorry. Adhe mari life can change, increase or it can be decreased. So similarly, residual value can increase or decrease. So cost minus residual value is called depreciable amount. Question should tell you method of depreciation. If generally not conveyed, na accounting purpose always SLM da. No, practically WDV. For accounting purpose, always SLM. You can chart easily depreciation based on the life. So, if this residual value, method, life, if it is changing now, then we should change depreciation. Up to particular years, we were charging depreciation amount. Suddenly something changed, depreciation will change. But we should change only on a prospective basis. For prospective effect, you should consider 2 numbers. Remaining depreciable amount, remaining useful life. These 2 factors to be considered in revising the depreciation. But suddenly you find you are charging 1 lakh, taking life as 10 years, already 3 years completed, about 30,000 would have been depreciated. You are having a value of 70,000. Suddenly you find remaining life which is 7, they are re-estimating as 5. Remaining life is 7, remaining life is 5. In other words, total life is not 10, total life is 8. What we are understanding is that we should be changing depreciation from 4th year onwards, next year onwards, as 70,000 is the remaining depreciable amount, remaining life is 5, we should take it only as 14,000. Like that, depreciation related, sometimes residual value will change. Sometimes life change, sometimes residual value will change. Or sometimes both will change. Proper understand. Always remember these 2 numbers I should be taking. Which 2 numbers? Remaining depreciable amount and remaining useful life. These are the 2 numbers I should take for charging the depreciation. Right? Fine. Next we have something called component method of accounting. The statement I will tell once, but I will explain very quickly. 1 minute. Statement the statement goes like this. If cost of a part of the PP is significant and life of that part is different from the life of other parts, then that part should be separately depreciated. So further we gave in the class example, building we are constructing, total cost 100 lakhs, the life on the 20 years, but in 10 years we should replace the roof. And the roof for the total cost was 25 lakhs. The roof alone will be depreciated in 10 years. Remaining parts will be depreciated in 20 years. That 100 lakh, remaining 75 lakhs will be depreciated in 20 years. Roof is separate depreciation. Remaining is separate depreciation. We will calculate. Doesn't mean that roof will be shown as separate asset and all. After computing the depreciation, it will be added and be deducted from the building value only. It is not deducted separately from the roof cost. So because it is an independent asset, that is what component accounting. Adukapram sometimes MCQ based, 2 facts you should be remembering about depreciation. What abdina? Presently, imagine you have a carrying amount for PPE some 30 lakhs. Today already it is having a fair value of 36 lakhs. Then still the asset requires depreciation. Yes, it requires depreciation because fair value is 36 lakhs. Even though it is still more than the present carrying amount, still you should charge depreciation. But suppose this asset will have a life of 5 years. After 5 years, it is expected to have a residual value of 32 lakhs. If the expected residual value is more than present carrying amount, there is no need for charging depreciation. I told you building as an example. Suppose sometimes there is a chance that expected residual value may be more than present carrying amount, you should not charge depreciation. But if the today's fair value is market price is more than carrying amount, still you should be charging depreciation. Our situation of when to charge depreciation, when not to charge depreciation. If asset is sold, difference is profit or loss charged in P&L. Then similarly, you have 2 models called cost model, revaluation model in showing PP in the balance sheet called subsequent recognition. Cost model means original cost minus accumulated depreciation minus accumulated impairment loss. Cost model does not mean showing at cost. Cost minus these numbers. But revaluation model always showing the asset at fair value. Fair value is the amount at which it should be shown in the balance sheet. But what happens whenever you prepare balance sheet, you follow revaluation model, asset value may have to be increased or decreased. Increase means profit, decrease means loss. Profit will be credited to revaluation reserve, loss will be debited to P&L. Profit is credited to revaluation reserve. I have kept this RTP ready. Okay, so profit is revaluation reserve. PP value increases, then it is profit, revaluation reserve. PP value decreases, the loss, that will go to SOPL. But for that we told one thing. What abdina? In the previous year or past, opposite of what is happening now happened now, then you may have to reverse what happened in the past, and then only you should give the original treatment. Original treatment what? Profit, revaluation reserve, loss is P&L. But to give this, what we told one statement now, if there is upward revaluation, then the amount of increase shall be credited to revaluation reserve. Except that it will be credited to P&L to the extent of revaluation loss, if any, recognized in the past and not so far adjusted. Similarly, if PP is decreased now, it is resulting in loss. Usually what we'll tell, debit to P&L, except that it is debited to revaluation reserve to the extent of revaluation profit, if any, recognized in the past and still so far not adjusted. Like that we made one statement. So like that we can easily understand whether it is profit or loss, whether it is revaluation reserve or whether it is P&L debit. Thereafter, we told one important thing. What na? For PP related, you have a revaluation reserve. What happens to this revaluation reserve? PP was like 100 lakhs. You charged it 10 lakhs depreciation. Then one more year 10 lakhs depreciation. It is 80 lakhs. Then increase it to 96 lakhs. You get revaluation reserve of 16 lakhs. What will happen to this revaluation reserve? So this can be transferred to general reserve. Only option. But transfer with general reserve, 2 options. It can be transferred only to general reserve, only option. And the way in which you transfer general reserve, 2 options. What 2 options? Either when you sell this asset, you can transfer total amount to general reserve. Other option, you can wait till the end of the life. Or every year when you charge depreciation to P&L. But so some portion of the revaluation reserve transfer proportionately. Proportionately means what? To the extent of excess depreciation. So because of revaluation, what happens now? Henceforth, you are going to charge 8 years depreciation. Remaining life 8 years. About 12 lakhs will be the depreciation. Had there was no revaluation, depreciation would have been 10 lakhs. Additional depreciation is 2 lakhs. Every year 2 lakhs will go to general reserve. Because this is required Because in AS28, when you are going to discuss impairment loss, we know which situation impairment loss. That I will tell you later. But when you get impairment loss, normally adjust in P&L. But if you have balance in revaluation reserve, that impairment loss can be adjusted against revaluation reserve. But I should know original created revaluation reserve, is it still existing or not? For that, I want to know whether the company had applied the policy of transferring to general reserve. If nothing else is mentioned, whatever revaluation reserve created is still continue to exist. I can't assume every year it is transferred to general reserve. Only question should tell the company have the practice of writing off revaluation reserve to general reserve. Only when they say that, we will say, oh, every year they transfer. Maybe at the end of another 3 years, only 3 years, another 3 years, 3 2s are 6 gone, but 16 lakhs is 6 gone, balance is 10 lakhs. Impairment loss or 11.5 lakhs, then I can adjust only 10 lakhs against revaluation reserve, balance 1.5 I will be adjusting in P&L. But either way, if they didn't have that practice of transferring to general reserve, means still you will be having revaluation reserve to the extent of 16 lakhs. Impairment loss of 11.5 fully can be adjusted against revaluation reserve. Like that we have been understanding. You should know that particular part. This is a provision actually connecting with AS28, impairment of assets. So impairment of asset last time came, so I don't have much expectation about impairment this time, but 2 marks the MCQ, I don't want to take any risk. About connecting various standards, single case study, suddenly they may bring out this provision. You should be knowing that particular adjustment, sir. But still tell sir one more time, when impairment will come? Impairment when it will come na? If the recoverable amount of the asset is less than carrying amount. The basic objective is carrying amount, balance sheet value can never be more than the recoverable amount. Whatever you can recover from an asset, that we call as recoverable amount. Never a balance in the balance sheet can be more than what a recoverable amount. If carrying amount is more than recoverable amount, the difference will be recognized as impairment loss. This recoverable amount is two value. One is called NSP, the other one is called VIU. Adala whichever is higher. If question says net selling price or value in use, most of the times they will not ask you this computation and all, but you should know net selling price, sale price minus selling expense, we call it as net selling price. Value in use means they will give cash flows, they will give discount rate, discounted value of cash flows, we call it as value in use. You need not be remembering about the goodwill part, that is this and all. Impairment like basic, when impairment will come, how to calculate NSP, how to calculate VIU. What is recoverable amount? Recoverable amount is nothing but higher of, not lower. Usually whichever is lower, no, either higher of NSP and VIU. So NSP and VIU, whichever is higher is recoverable amount. Compare it with carrying amount. If carrying amount is more, the difference is impairment loss. That impairment loss, first adjust against dash if any. Revaluation reserve will be if any. And still if you have impairment loss, adjust in P&L. Forget about the goodwill concept. That's classroom mode. Examination, this much is sufficient for answering this question from AS28. This is the problem from AS10 and AS28 also. The reversal of impairment loss, so many other provisions I discussed. This much you should be aware of for solving problem from AS10 and AS28. My dear friends, 5 ஆயிடுச்சு. AS26 basically again AS10 oda provision da. So you will be recognizing intangible asset related initial recognition. Again question comes, what is cost? Cost again depends upon the concept of application da. No need for additional issues. You can easily understand what is cost. And key area was actually related to research and development expense. And some issues related to amortization you should know. So research and development, research phase expense always charged in P&L. Development phase expenditure can be capitalized if certain conditions are satisfied. Development phase expenditure can be capitalized if certain conditions are satisfied. Most of the times in the R&D the exam question varudhu. For research phase na always charged in P&L. Development phase expenditure na can be capitalized if there is future economic benefits. Suppose future economic benefit conditions are not satisfied na, even development phase expenditure also should be charged in P&L. Next, see the base பண்ணி இருக்கிற MCQs. Once development phase expenditure expensed, later on condition satisfied na, it cannot be capitalized again. Once expense, always expensed. But once it is capitalized, subsequently condition not satisfied na, it should again go to P&L only. So you can't tell that once capitalized, always capitalized, you can't tell. So capitalized because condition satisfied. Subsequently condition not satisfied na, then definitely it should go to P&L. But expensed item cannot be capitalized again. So that is the key area of R&D. From an amortization perspective, usually we told you depreciable amount na cost minus residual value. Intangible asset generally residual value will be taken as nil. Unless you have a third party contract, generally residual value nil. அதே மாதிரி life is the basic life, number of years. But generally it can't be more than 10 years. Intangible asset useful life cannot be more than 10 years. In the rendu point, residual value nil no, amortization period generally cannot be more than a period of 10 years. Suppose some company has been charging intangible asset depreciation considering 12 years na, then there is an error. Appo if you rectify in the current year considering life of 10 years அப்படினா current year மட்டும் தான் amortization should write. Previous year amount what you are rectifying is called prior period item. You should be recognizing something called prior period item as per AS 5. So like that one problem and all we have solved. மற்றபடி அதுக்கப்புறம் some amortization related problem used to come. So this is the cost. First 2 years we charged the amortization like this. Next pattern of benefit changed. அப்போ again remaining amortizable amount தான் you should depreciate over the remaining life. So same depreciation concept தான் applicable. AS26, AS10 problems are unique and same தான். So the same type of problems da, so you can solve this problems. So you can solve AS10 problem, AS26 problem, also solve basic problem from AS28. You can solve basic problems from AS28. So like that you can just prepare these 3 standards also, 5 chapters plus these 3 standards. But I would like to take another 10 minutes here. I don't want to push few standards here to the other classes about AS12 and AS16. இதுவும் asset related ரொம்ப linked standards. அதுவும் MCQ single case study these things can come. So I would like to test these part alone, my dear friends. Government grant. 3 types of grant. Broadly into government giving money, monetary grant. Government giving asset, non-monetary grant. Simple grant. Government giving money for 3 purpose. In the capacity as promoters contribution. For buying asset. Buying asset. They are not giving asset, they are giving money for buying asset, which could be depreciable asset, which could be non-depreciable asset. Non-depreciable asset, depreciable asset. It could be for certain services. So they are giving money in the capacity promoters contribution means what na? Somewhere we are going to start a business. Whenever we want to start business, owners only should arrange money. Government says that no, if you start business at so and so place, government will give you some portion of the total fund required. That is what we call it as the amount given in the nature of promoters contribution, which means like owners fund they are giving. Will they get ownership? No, they won't get ownership. They're just giving us free da, but what I should have contributed, other a portion government contributes. Lakshadweepla you start business, government says that out of 100 crore 20 crore they will give free. Upon the 20 crore is called government grant in the nature of promoters contribution. Seri. That will be simply credited to capital reserve. The grant will be credited to capital reserve. You can make in 2 entries or you can make in single entry. Bank to grant, grant to capital reserve, or directly bank to capital reserve. Nothing wrong in it. Then, if the grant is received for non-depreciable asset, that is land. Appo I purchasing land for 100 crore. Government is giving 20 crore to me. To support this purchase, I have two options. Either reduce from the value of land, or I can show it as capital reserve. I can credit capital reserve or show it as a reduction from the value of land. Either I can show land at 80 crore or I can show land at 100 crore and capital reserve of 20 crore. Like that we can show. Most of the times exam question is based on depreciable asset. The depreciable asset related issue enna appadina. So again two options. Either I can show it as reduction from the value of asset. Like the previous case, either I can show it as reduction from the value of asset, or I can take it to liability side under a head called deferred government grant. And from liability side, every year I can transfer to P&L account in the proportion of depreciation. For example, if I try if I buy an asset for 100 lakhs, government granted 20 lakhs, life 5 years. If the treatment number 1, what I am reducing from the asset, in that case, accounting entry what PPE to bank, it is 100 lakhs. Then when I receive 20 lakhs grant, it is bank to PPE, it is 20 lakhs. Thereby in the balance sheet, asset will be shown at 80 lakhs. Then I will be charging depreciation, which is 80 lakhs divided by 5, it is 16 lakhs. SOPL effect what? SOPL I will be having 16 lakhs. Balance sheet what effect I will be having? Balance sheet it is 80 lakhs minus 16 lakhs, I will be showing 64 lakhs. Every year 16 lakhs, it will go to P&L. Grant is straight away I have already deducted from the PPE value. This is method number 1. Grant received deducted from the value of asset. Accounting entry is bank to PPE. Reduced PPE balance will be depreciated over its life. This is one method. Method 2 is taking this as deferred income. Deferred income, it is bank to, PPE to bank, it is 100 lakhs. Then grant received, I don't adjust against this PPE. It will be bank to DGG, it is 20 lakhs. Then depreciation will be transferred, calculated on 100 lakhs. Depreciation to PPE, it will be 20 lakhs. How? 5 years life. Then same way DGG also goes to P&L. DGG to P&L, it is 4 lakhs divided by 5 years. So thereby divided by 4. Net effect, if you see the P&L effect is only 16 lakhs. 20 lakhs in debit side, 4 lakhs in the credit side, you find net effect only 16 lakhs. So that SOPL effect remains the same under both the methods, whether you have first method or second method. This is basic accounting. But they may complicate the issue by a concept called refund. They may tell after 2 years the grant is fully refunded. If the grant is refunded now, what happens now? If you follow method number 1. What method number 1? You already reduced from the value of asset now. Now the grant fully, imagine, refunded. 20 lakhs refunded now. Then it is simply added to the value of asset. Upon the method 1, after 2 years, asset value will be, suppose refund after 2 years happening now, then the asset value will be 64 minus another one more 16 would have gone. Because 80 lakh, 2 years 16 divided, so thereby amount would have been 48 lakhs. You refunded 20 lakhs, it becomes 68 lakhs. Our depreciation will be considering remaining life. Always AS10 length you should follow. Remaining life. Our 68 by 3, hence for depreciation will be 22.67 should be the depreciation. But had you followed a second method, then asset value by this time will be 60 lakhs. You will have DGG to the extent of 12 lakhs. By 4 lakhs, it has gone 2 years to P&L. And 20 lakhs you have depreciated. Now what happens abdina? So when you refund this 20 lakhs, depreciation unaffected. Before refund, after refund, it continues to be the same. Only thing is, DGG debit 12 lakhs. But to bank it is 20 lakhs. About P&L debit 8 lakhs. Because initially grant was credited to DGG. About refund பண்ணும்போது DGG should be debited. But DGG time in debited only to the extent what is available. Further amount should be debited from P&L and credit bank 20 lakhs. So like the refund time you may get different effect. Henceforth after refund, if you follow first method, depreciation will be 22.67 lakhs. But if the second method, depreciation continues to be 20 lakhs. Before refund, effect under both the options were same in P&L. But after refund, you find SOPL effect is slightly different because depreciation amount is different. So that you should be knowing. This is the problem. Depreciable asset related grant receipt, grant refund. Grant receipt is two treatment. Either reduce it from the value of asset and revised value should depreciate. Or don't change the value of asset, put it into DGG. Asset depreciate, DGG charge it to P&L. But cash flow statement we have seen one problem. Amortization of grant. Amortization of grant you should understand it is actually income, not expense. Amortization like that and all we discussed, my dear friends, in the cash flow statement also. This is the basic grant. Mathabadi the grant received for services past service now you are receiving a full P&L. Future service you are receiving grant it will be deferred and amortized. Asset effect DGG every year goes to P&L. If you receive asset at concessional value, if you receive asset free of cost, not money, you are receiving getting asset itself, solar plant, nuclear plant, something like that you receive. If you receive free of cost, then it will be recorded nominal value. So 100 lakhs of worth of asset you are getting free now. Show 1 rupee, 10 rupee value. Suppose 100 lakhs of worth of asset you are getting for 60 lakhs then show the asset at the 60 lakhs. Like that we are understanding accounting for government grant. That's a 4-5 hours chapter but this also should be knowing. Idellam PP oda connect panni or case study illa yellow's class illa tomorrow's preparation. I would like to take AS16 also by spending another 5-10 minutes time. It is actually borrowing cost. In this AS16 borrowing cost, we should know basic accounting for borrowing cost, interest cost. In the accounting, two things. One, it is expensed, illa adu capitalized. This standard says when and how much to be capitalized. When borrowing cost should be capitalized, how much should be capitalized. Whichever amount, whenever it is not capitalized, it is always expense. Expense means it is charged in SOPL. Capitalized means it is added to the value of some asset. And the asset has to be a qualifying asset as per AS16. Upper standard make the statement. Borrowing costs that are directly attributable to the acquisition, production, construction of a qualifying asset should be capitalized. Like that the standard says, which means any borrowing cost relating to qualifying asset should be capitalized. If it is not relating to qualifying asset, it should not be capitalized, it should only be expensed. What are borrowing cost? Sometimes they may test you. The brokerage, commission paid relating to the borrowings. Forget about the entire definition of finance charge arising from finance lease, etc. Or debenture discount amortize, aduvum borrowing cost da. Debenture borrowing da, appo debenture kudukra interest borrowing cost, debenture related debenture discount kuda borrowing cost. Similarly, to get the loan, to get the debenture, if I paid underwriting commission or some brokerage commission, etc. I paid na, that also is part of borrowing cost only. Like that we are understanding borrowing cost. Adala or key part is foreign currency loan. If you have taken loan from a foreign bank, you have a foreign currency loan, and the foreign currency loan as per AS11 is called monetary item. As per AS11, this foreign currency loan is called a monetary item. This monetary item requires restatement. Upon the restatement, even though loan is not getting repaid, the loan is taken $1 lakh, but I didn't record $1 lakh. I recorded at that time it was 80 rupees. It was 80 lakhs. I recorded. 1 year later, at the $1 lakh, the corresponding value 90 rupees. I have to make the loan to 90 lakhs. Even though my intention to repay the loan is after 10 years, but I should show 90 lakhs. Your loan value increased. 10 lakhs loss is there. This exchange loss as per AS11. Basically, the exchange loss as per AS11, but AS16 says that no. Some portion of this exchange loss should be accounted as borrowing cost. This is basic. Apart from the brokerage, commission paid for loan taken, debenture discount, etc. and all, basically interest also borrowing cost. Now what we are discussing is interest cost, exchange loss from foreign currency loan. But entire exchange loss is not borrowing cost. Some portion we will consider as adjustment to borrowing cost. That how much portion? Adhukku standard says that AS16 says that it is difference between interest in reporting currency, interest in foreign currency. For example, had you borrowed this loan in India itself, you should have paid interest at the rate of 12%. But having borrowed in dollar, you are paying interest only to the extent of say 8%. Had you borrowed in India, you would have borrowed 80 lakhs loan, and the interest rate is 12%. What is the interest you would have paid? 9,60,000. 9,60,000. Sorry. Interest in dollar, how much you are actually paying? Actual interest what you are paying? That's $1 lakh into 8% into 90 rupees. Is the real interest what I am paying in dollars? It is 7,20,000. In the difference, we'll consider as adjustment to borrowing cost. But when we say difference adjust to borrowing cost, out of how much? Out of 10 lakhs exchange loss. Your exchange loss is 10 lakhs. How? That is initially recording loan as 80 lakhs. And the loan of 80 restated to 90 lakhs. So you find there is an exchange loss of 10. 10 lakhs usually goes to P&L as exchange loss, but now we are telling no, out of 10 lakhs, 2 lakh 40 should be considered as adjustment to borrowing cost. Adjustment to borrowing cost. Balance 7.6 lakhs will be considered as exchange loss as per AS11. Basic exchange loss 10 lakhs mein AS11 da. But AS16 says some portion we will consider as adjustment to borrowing cost. So out of the head alam pogum, but remember this is also an important adjustment. So you should recall this. So basically what we are telling is that when you take a loan in foreign currency, that is a monetary item as per AS11, that will be restated to the balance sheet rate. The differences will be considered as exchange loss as per AS11. But AS16 says some portion of that exchange loss should be accounted as borrowing cost. How much portion? Difference between interest in rupees and interest in foreign currency. So that way, had you borrowed in India, how much interest? The question will tell 12%, about 9,60,000. But actual interest what you are paying is $1 lakh is what you borrowed. That's 8% committed. But when you pay, it is 90 rupees. But that is the interest actually you are paying upon the difference. In suppose that exchange difference was only 2 lakhs. Exchange difference was only 2 lakhs. In other words, 80 become 81. 80 borrowed. If it is only 81, 82 nu vechipom. 82 then difference we are finding. Interest in rupees, it is still 9,60,000. Interest in dollar, it is $1 lakh into 8% into 82. 6 lakh 56,000. Difference we are getting as 3,04,000. In this scenario, you should understand what is the adjustment to borrowing cost. It is only 2 lakhs. So here it will be restricted to 2 lakhs. And what is the treatment as per AS11? Nil. You should not tell, so 3 lakh 4,000, but 2 lakhs the remaining concept, because basically we are learning how to account this 2 lakhs. We have concluded entire 2 lakhs should be considered as adjustment to borrowing cost. Nothing goes to AS11. Actually what we are telling is, what is adjustment to borrowing cost? It is difference between interest in rupees and interest in foreign currency, or actual exchange loss, whichever is lower. That amount will be considered as adjustment to borrowing cost. Remaining amount, if any, out of exchange loss will be accounted as per AS11. This is how that particular borrowing cost definition lende or serious problem area that arises. Next, qualifying asset asset that takes substantial period. I told you simplified construction, manufacture. These words used you can assume that as qualifying asset. Generally 12 months period other base money you need not decide. Construction, manufacture, you can assume it as qualifying asset. Next question arises, how much borrowing cost to be capitalized? In between you have three issues: commencement of capitalization, suspense of capitalization, cessation of capitalization. Asset is ready stop capitalizing. Development interrupted then suspend. Commencement borrowing cost should have incurred. Qualifying asset development activity should have commenced. Then expenditure on qualifying asset should have incurred. I should have borrowed, I should have paid interest, I should already spend money on qualifying asset. Development activity should have commenced. The conditions you can note. Basic problem area is how much borrowing cost to be capitalized. That depends upon, is it general borrowing or specific borrowing. If it is a borrowing exclusively taken for the construction of a qualifying asset, actual borrowing cost minus something called temporary investment income. Don't forget this. They may give this. But if it is general borrowing, you need not consider temporary investment income. It is only capitalized based on weighted average cost of borrowing. So the weighted average cost of borrowing, what's the general borrowing? Suppose you have two borrowing, 10% loan, 20 lakhs, 12% loan, 30 lakhs. Actual total interest divided by total borrowing into 100. Now, here 2 lakhs plus 3.6 lakhs divided by 20 plus 30, 50 lakhs into 100. So 5.6 lakhs divided by 50 lakhs into 100. It is 10 point some percentage. 10 11.2 நினைக்கிறேன் 11.2%. That 11.2% will be used on the borrowing to find out the borrowing cost to be capitalized. So these were the fundamental concept involving this AS16. Based on 2-3 questions, high quality problems are there. Please solve the problems from AS16 also. Foreign currency related problem, special borrowing, specific borrowing, general borrowing related problem, then conditions for capitalization. Qualifying asset, you can simply assume construction, manufacture and all. Qualifying purchase, it is not a qualifying asset, it should not be capitalized. These are the things you should be understanding from AS16. AS10, 12, 16, 26, 28. These 5 standard sort of problems you should be solving apart from 5 chapters. Amalgamation, reconstruction, financial statement of companies, cash flow statement, investment accounts. Idella practice panni, doubts na WhatsApp it, all we can raise in the next class. Sunday session we are meeting. Monday or timing alone I will confirm later. Okay, so thank you my dear friends. Good evening. Go practice. Spend good time on to preparation. Happy preparation. I can tell only that. Okay, thank you so much. Bye. Then that is a mistake. Pakka mistake. General borrowing should not be deducted. Only for specific borrowing should be deducted. that is fine, because actually it will be shown, it can be shown as an exceptional item. But loss on sale will not be shown as part of other income. Loss on sale should be shown as other expense.
Other expenses.
Under other expense, it should come.
But does it form part of exception item, or can I just show it as other income?
You show it as because SOP study module of what they are presenting, you show it. Practically, no, this will be shown only as an exceptional item.
Other income is from
You can show it as other income, but loss on sale deduction is from other income, not expense. It should be shown only as other expenses. Practically, that is only an exceptional item. When you are writing Jan, revision. Okay. All the best, pa. Sunday இது பண்ணுவோம். Thank you so much. Bye. Online friends, okay தானே எல்லாம்?
sir, like provision for tax, then it is like we have to prepare a special final. So like sometimes given tax rate and sometimes given is provision for tax. So what amount should be taken?
Cash flow statement.
Cash flow statement.
Cash flow statement.
Provision for that.
Provision. I will have to text once again in the notes. So I will ask in the next class.
You take with numbers and bring it to me. We'll just answer you. Okay. Right. Doubts கேளுங்க. Take good care, good rest, prepare. Exam rock பண்ணுவோம். Don't worry. Advanced accounting easy தான். Consolidation மாதிரி. Normal mathematical operation தான். Okay.